Good morning. Good morning. Good morning, ladies and gentlemen. Welcome. Very warm welcome to this TradeWinds Shipowners Forum here at North Shipping, the 60th anniversary North Shipping, no less. I hope you've been having an enjoyable week so far, but not enjoying it too much, I trust. It's a great pleasure that you can all join us today. And I'm pleased to say I think we've got a fantastic program today. We've got a group of some of the world's biggest and most influential ship owners, major investors in shipping, the biggest P&I club, and a pivotal deal maker in IMO's carbon pricing policy. And to add to it all, we've got 3 head-to-head interviews with key figures in global shipping. We've just got a slight change in the program because Lars Barstad has been slightly delayed, so we're going to kick off with the opening panel. So if I could... Actually, just before that, excuse me, I do have some housekeeping notes to add. I'm never that keen on offering housekeeping notes, but they do need to be shared with you. First of all, most importantly, there is no fire drill today. So you see the little green figures at the far side, though, so don't run like hell, but make your way calmly towards those if you hear the alarms going off. We do have the TradeWinds Events app, which if you look at the back of your lanyard here, you'll see a barcode, and you can get to that, and you can buy it on, well, not buy it, but open it on the Apple Store and Google Play. How to get into it is you use your email address that you've registered with, so it should be your normal email address, and Norway 2025 with a capital N. If you've used it before and you can't get in, log out and go back in again. Tip from the top there. The important thing about that is you can ask me questions to ask the panel, and you also have the contacts with other delegates and see details of the program and all the speakers. And lastly, I would just like to thank all our sponsors for their generosity, which, of course, without them, we wouldn't be able to host events like this today. So, with that, as I say, could I invite the panelists to the first panel to the stage, which is Building the Future of Shipping. Please. Morning, everyone. Thank you. Pleasure to have you with us today, and thank you for making the time. It's I think we've got a great diverse range of figures here with us this morning. 2 of the world's biggest ship owners, arguably the second and third biggest ship owners in the world by absolute tonnage. We have a major ship owner, in effect, who's a fund manager, been a big investor in shipping in recent years, the world's biggest P&I club, and then a key figure in the debate at IMO in negotiating the deal, which is set to fundamentally change the economics of shipping in the years ahead as it moves towards decarbonization. As I said, this panel, the overall theme is building the future of shipping. But this is a polarized world, and there are challenges and opportunities everywhere. Shipping has been a little like an animal caught in the headlights, if I could say, in the last few months with Donald Trump's barrage of statements and policies. Never has the industry been caught in such an onslaught of impactful issues, such as tariff, energy policy, shipbuilding policy, and their indirect impacts. Yet, many of the market fundamentals remain very strong, as they were 6 months ago. Markets are slightly subdued, but not falling apart. There's a lot of uncertainty. New buildings are down. There are questions on the speed of decarbonisation. So there are a lot of moving parts. And to kick off, I'd just like to ask the panelists a broad question that after this mini golden age of the last 3 or 4 years, Is that now coming to a close? Andy Dacey from JP Morgan Asset Management. Could I put that question to you?
It's a good question. I do think that, as you say, we have gone through this little sort of bubble of excitement over the last 5 years. And as I look ahead, for all the reasons you mentioned, Julian, I think we're in this doldrums to a certain extent, right? There's no real necessarily catalyst to the upside. At the same time, there's potential catalysts to the downside, all the points that are mentioned, whether it's regulation, whether it's tariffs and the impact of tariffs. But I do think there are some silver linings that we're well aware of and that aren't going to go away. And those silver linings are the fact that supply is constrained. And I think it's more constrained, frankly, than it's ever been in the past, whether it's the issue with shipyard workers in Asia, and now, China was perhaps the one upstart that would have necessarily obviated that fact with the shipyard workers in South Korea and Japan. But China now is going to be, from a regulation perspective or tariff perspective, somewhat stymied, I think, from a new building perspective. So from that side, I do think the supply side of the equation is going to be a little bit more manageable going forward. Now, the big question is what's going to be the impact on tariffs? And my view is, while the US is obviously pursuing a very protectionist strategy, I don't think the rest of the world is pursuing a protectionist strategy. I don't think the rest of the world has the same inclination. And my view, at least, is that the rest of the world is going to reform its trade patterns to a certain extent in response to what's happening in the US. And we're already starting to see that. Long simmering discussions between the EU and China, let's say on electric vehicles. Now we're showing some signs of resolution. The EU is now willing to accept EVs at minimum price levels, or at least they're signaling that it's going to be the case in the not too distant future. For example, India and the UK, a long simmering discussion on trade, which has now come to a resolution. So my view is that while the US will still be a significant part of the global economy, it's the biggest economy in the world, the rest of the world may have a little bit of a different view going forward.
Marie-Caroline Laurent from MSC Group. Obviously, the container sector has been at the eye of the storm in recent months, with huge swings on the Pacific for very obvious reasons. When you're faced with 145% import tariffs, you don't necessarily buy or are able to export. How are you viewing the coming months and managing that sort of direct impact?
Thank you. Thank you very much also for inviting us today. It's interesting, as you said in your introduction, that maybe for the first time, countries and governments are realizing the power of shipping and the importance our industry has on their economy and on their trade activities. So that is also for us quite interesting to see that from an industry that was more in the background, we've become much more the topic of conversation, especially with the new Trump administration. The tariff discussion is obviously not just about trade. It's, as we all know, much more of a political tool used to get some deals done on other matters. When it comes to the recent movement on tariff and effects, from the MSC Group, this basically just has confirmed our strategy to have this very flexible, agile network, standalone network that has allowed us to redeploy our vessels, adapt to where the trade movements are going, and continue with our strategy to have our 900 vessels deployed where the trade needs to go. And as you've been just saying, trade hasn't stopped. It's just trying to figure out where to reposition. I think one of the difficulties that we are all facing is that it's not just tariff policy, it's the unpredictability day by day of the political announcements that we have to follow. And I was in Washington a few weeks ago, and it's interesting to see that when you talk to government officials, they have the impression that ships are just waiting there for a signal to restart or stop. This is obviously not how we work. We have to redeploy. So this is also an interesting moment for us to speak to regulators and politicians to make them understand how global trade works and how global shipping actually supports this activity.
Richard Bayer, NYK with 850 ships, you have clearly a very complex web of trading routes at any one time. Isn't it the case that shipping thrives on disruption? It gets paid to deliver cargoes.
I think it's very responsive, it's very agile, it's very flexible, it's very imaginative. So in that sense, yes, it thrives on disruption. Where that disruption's entailed additional ton miles or deviations or congestion, then shipping's profited quite nicely from that sort of disruption. Whether that necessarily equates to a golden age for shipping, I don't know. But I think where disruption, as this potentially could lead, where it leads to a reduction in demand and a reduction in seaborne trade, then I think shipping isn't necessarily going to respond so well. So I think globalization is fundamental. Shipping has been a key facilitator of global trade, obviously, but we're responsive to our charterers and our customers, and we'll deploy ships accordingly, as Mary-Caroline has said. I think coming back to Andy's point on silver linings, certainly working for a Japanese owner and as a significant member of the Japanese shipping community, the program of I think what are euphemistically called service fees potentially being rolled out in October on Chinese-related shipping, I think they do potentially present a very significant silver lining for Japanese, Korean, and other non-Chinese shipbuilders. So yes, I'd echo the potential for silver linings here.
Has this period of disruption, though, paused your decision-making in any way? Are you looking at deals and possible transactions and investments in a slightly more wary fashion?
Transactions, well, I mean, ships they're ordered, they have a long lead time, so those that are already under construction or contracted, that's happening no matter what. I don't know that I necessarily agree that we're in the doldrums at the moment. We are certainly waiting to see what happens. I mean, the American administration is negotiating with countries on a bilateral basis, so it may do a deal of enter into a treaty on a certain basis with one country and a very different basis with another. So anticipating or foreseeing how that will play out is extremely challenging. So we're not rushing into anything. But I think, yes, we're in a sort of a wait-and-see mode.
Rolf Ropperstad from GARD. One of the unforeseen consequences of increased complexity of trading is the necessity for ships to be rerouting with weather problems, different ports, repair problems in different ports, and that is driving up insurance costs for you. Is that a significant factor in the way you're looking at the market as it is evolving today?
I think it's too early to conclude what kind of consequences tariffs and disruption in trade will have for insurance. Logically, you would think that more port calls would lead to more claims. Then if there is some kind of chill on the activity, that would probably lead to a little bit less claims. But I think we have to expect some more problems if the sea routes are shorter. Regional voyages creates more problem than ocean-going transatlantic, trans-Pacific voyages.
Indeed. Svining, at the IMO, the negotiations in London in April felt the hot breath of the White House on their back, but the multilateral approach came through in the end. You must be satisfied that that was a positive conclusion in what could have been a very difficult moment.
Absolutely, and I think what we are looking at now is as a part of a larger trend, because if you look into the situation globally when it comes to geopolitics, it's just not happening now. It's a part of change in powers over the years. And how do you then respond if some competitors come closer to you, and how do you then respond? Governments, of course, would like to have stability, cooperation, multilateralism. And that is what we have been building up since the Second World War. And then we have had some pulses where you have some sudden changes. But over the years, you have stronger and stronger global rule-making. Governments would like to have trade to nourish, But then we also need to accept that there is change in, let's say, where there is economic growth and where there is more stagnation. How do you then respond to it? The last period, of course, has been a kind of extreme. But what is also happening is then when then other states find together. And shipping has quite often been the line between Asia and Europe, both when it comes to the trade and who is in power. Also when it comes to negotiations, you know, Asian countries, Europe is quite strong when it comes to making a deal. And what happened last month, or actually 1.5 months ago, was clear demonstrations that, yes, some oppose this, but the rest of us stay together and we want multilateralism and we want to keep our promises and go in the direction set.
Andy, the IMO agreement, which is yet to be formally concluded, that should be in October, and I'd like to talk to you a little more about that signing in a short while. It will be the world's first global industry-wide carbon pricing scheme. How do you see it will reshape the energy transition and the fueling transition over the next 15 or 20 years? Is it going to have a material impact on ship owners' attitudes in the next 5 years in the new building space, do you think?
That's a great question, and I've been struggling with this issue, not just what's happened with the IMO, but also new regulations that are coming in, and the IMO development in terms of LNG, and the impact on LNG, as you alluded to, is quite negative. So clearly that's going to have an impact on LNG as a dual fuel going forward. I'm sure that's going to result in fewer dual-fueled LNG carriers, or not carriers, but dual-fueled ships being ordered going forward. But the other thing that I really struggle with is, as part of that, and as part of the broader dialogue, there's issues with clearly becoming, you know, obviously more neutral from a decarbonization perspective. So that's adopting new fuels like ammonia, methanol, potentially hydrogen. And we all, I think, know the challenges that exist in those particular fuels. And not enough ammonia out there in any way, shape, or form. Certainly, methanol's got the same infrastructural challenges. And the thing that I really worry about is that regulators will make these decisions on behalf of the shipping industry, and then 3 or 4 years or 5 years go by, we're going to be in 2030, and the industry is going to be looking at the regulators and saying, we just can't comply, not because we don't want to, but because we can't get the fuel. And not to say that there won't be initiatives by oil companies to develop that source of fuel, but I see that as a very significant looming issue. And the same with, you take tariffs. I mean, look at the US administration's efforts to negotiate something with Japan. And Japan very much came back and said, listen, we are in Asia. We have a historical connection with the United States. We are inclined to try to do something with you, but we can't ignore the fact that China is our neighbor, and that going forward, China is going to be a significant part of what we want to do, and we're not going to make an agreement that's in any way deleterious to what we're trying to achieve with China. So my point is that there are constraints out there, whether in fuel, the constraints of reality, or whether in geopolitics, the constraints of historical norms that have now been established with the evolution of the global political system. So I think we have aspirational goals, which we all should pursue, but reality, sadly, is going to get in the way.
Svani, how do you respond to that from a major investor in shipping is providing shipping services?
First of all, this is an agreement between governments, and governments have then had it's informed decisions. We are not saying it is easy. It's quite complex. We all know that, but we all know that it is also possible. And so, meaning it is actually more dangerous for governments to lead us strongly into climate change. That is the alternative. So the decision by governments, which I think will be confirmed in October, that now the direction is set, and it is then for the various part of industry to now prepare and respond to it. We had the same discussion when it comes to the low sulfur fuel oil. And then I asked various oil companies, when can you deliver? Exxon said, never. Chevron said, we can deliver low sulfur fuel to the whole shipping industry tomorrow as long as you pay. Now, this is more complex, but governments has taken a responsibility now, the direction is set, and we need to prepare the investment to make it happen. It's not easy, but I think the industry will make it, both when it comes to the energy companies, the ports and shipping and technology providers. I think it's possible, yeah.
Richard, there seems to be a sort of a division here between the conservative consensus, you could say, which is always going to be in an industry like shipping, which is viewing this as a problem that will go away if we just sit tight because we hold the ships and people need the cargo to move. And those who are investing and buying into that there will be an energy transition and starting to invest, clearly orchestrating that energy transition is very difficult, but it needs commitment from owners, from fuel providers, and indeed from regulators. How are you viewing this process in NYK?
Well, I mean, first, in terms of the outcome of MEPC 83, I mean, NYK is very supportive of the outcome of this first meeting. And I think I almost congratulate the IMO and the member states who voted in favour of this initiative, because, as you say, it's quite an achievement to have a global programme like this agreed upon. As far as the transition is concerned, when I remember very clearly, NYK built the world's first LNG bunkering vessel, and I remember at the time going to things like Gastech and talking to ship owners, talking to fuel suppliers about their appetite for participating in an LNG bunkering market, and it was the whole thing was around the chicken and egg. Well, you provide the delivery system, you provide the fuel, and we'll build a ship to receive it. And I think we're looking at a similar sort of situation now. From our perspective, we already have, we've got our fleet of LNG carriers, so we're used to working with LNG as a fuel. We've got dual fuel vessels on the car carrier side. We're building methanol fuel vessels. We have an ammonia-powered tug that's been in operation now, getting on for a year, and we've done a number of bunkering operations with that. So, from our perspective, I think there's going to be a blend of fuels required. There's not going to be a silver bullet that will tackle, that will deal with the issue comprehensively. There are clearly going to be issues around, well, there's suitability of fuels in different fora, so what may work well for ferries in the Baltic may not work well for tramp vessels operating in Africa or South America or wherever it may be, where you have vessels operating on established bunkering routes with large bunker stations, with regular scheduling. Their requirements are potentially going to be very different, and different fuels will fit well. So we see a blend of fuels being required. I think for us the key thing is around the greenhouse gas intensity of whatever fuel is being used, availability and price, and that will vary from that will vary from fleet to fleet as to what it is we're looking at.
Marie-Caroline, I read that you are very much a transport policy expert. You joined MSC last year. The whole purpose of these the IMO midterm measures is to drive action, drive change amongst ship owners and operators to make the shift, to price carbon, to make an economic impact. Is it expensive enough to drive that change for you, the world's biggest liner company?
And first, maybe to remind everyone why the industry is so supportive of this New Deal, despite what Swinert said, that it's a government goal to support climate change. Is that what's the alternative that we have if we don't have that deal? It's basically we will have 10, 15 different national schemes that will all have various combination of carbon tax, local fuel requirements, different certification, different definitions of each fuel, which is, to be honest, a bit the word we have today. We have the European Union that has established its own rules. There is no automatic recognition of the certification or sustainability criteria around those fuels. And to me, this is the main problem today for investment, beyond just the price of the scheme. This is certainty, because today the bio-LNG I will be purchasing in China, for instance, I have no guarantee this will be recognized in the EU for my compliance mechanism. So this is today a huge issue that we are facing, and this is why, in a maybe counterintuitive way, the industry has been very supportive of a global scheme because we cannot work with the current situation, simply. So that's just for everybody also to be very clear about. When it comes to is it enough, I think today what we have on the table will be costly. It will be very costly. We've started to look at what this means for our group, not just the container, but all of our vessels. And this is clearly sending a clear signal that we need to get going. Even more, I have to say, it's a clearer signal even than what we have with the EU today. We will not be able...
So you do think it's more, will have more material impact?
The immediate effect, very concretely, is that in the immediate compliance period of IMO, we will not be able to just do fossil. We will have very early on to get on with investment of any form of bio molecule. Biodiesel, bio-LNG. I would maybe slightly disagree with my neighbor about the future of LNG. As MSC, we've done a clear choice of LNG investment. Of course, not for fossil LNG, that's very clear, but for the technology that allows us that transition to bio, because today what you have in the market is bio-LNG. We can purchase it. And so that gives us an immediate solution for our
There are risks, though, of course,
transition.
in creating huge demand for a much bigger market in biofuels, and those have other sustainability questions.
And this is why certification is important, and this is why a unified international scheme around the certification of those biofuel, whatever form, needs to take place. So this is for us the perspective. It will be costly what we have on the table. It triggers already today decisions to invest in alternative fuel. It has triggered, and this is something we've started many years ago already, the transformation of our fleet towards new technologies such as LNG.
Rolf, your perspective on this?
I think IMO is a very effective way of introducing new regimes. Let's look at what happened with double-hull tankers back in the early 90s.
Even I remember that.
You remember that? And there was a lot of screaming at the time as well. You know, how is this going to
It's the end of shipping.
It's the end of shipping, right? The point is that today, pollution from tankers is less than 5% of what it was prior to the introduction of double hulls on an average basis, 10 years average basis. Only 5%. So it's a really effective way. IMO is setting the rules. Classification societies, insurers are following that, adapting our products and coverage according to that. And that is a very effective way of doing it. And as an insurer, we are very mindful of always looking at how to cover a new risk when it's occurring, not whether we should cover it. And in GARD, we learned it the hard way. Because GARD was established in 1907 as the first carbon-free P&I club. We insured only sailing ships. And the reason for that was that the local owners in southern Norway resisted change. They didn't want new technology. They thought that engines were dangerous. And they said that we should stay with the existing technology only. Everything new is dangerous. And what happened? Only 6 years after, even the sailing ship owners in southern Norway had to put engines in their ships. But for GARD, it took actually a century, 100 years, before we became a global leader. So we learned the hard way. We were established for all the wrong reasons in 1907, and we will not do the same mistake again.
Andy, is this a tough enough financial driver for you as an investor?
I think it falls into the whole silver lining aspect of it. I think there'll be significant challenges on supply. Not that it's not a noble goal. We should all find ways to decarbonize, and I think having governments say that this is what you need to do is going to force action. But I think the challenge is going to be, in a good way perhaps, is that the cost of compliance, the cost of investment is going to go up. And if we can't forget the fact that if you look around the world, I believe the average number of ships owned by ship owners is, don't quote me on this, but I think it's in the single digits, so 5, 6 ships or something like that. So for those small ship owners out there, finding the money to invest in new technology, finding the money to hire the resources to comply with things like EU ETS, Fuel EU, trade the units, all of that is going to be extremely costly, and you're just not going to have the capital base to support those types of resources.
Doesn't that just mean the business gets remade, and that to be in shipping, you need to have a higher level of sophistication, greater commitment, the cost will be more, but then that will impact trade and what is viable to trade, and maybe, constructively, a little more nearshoring or friendshoring?
I don't know if it's going to lead to nearshoring and friendshoring. I think it's going to lead to bigger shipping companies, like my two colleagues to the left, right? Those are the companies.
And yourself.
And arguably ourselves that are going to have the resources to comply. I always look at a map of ships trading around the world. I'm sure we all have our GPS tracking system. And if you put every ship that's trading around the world and you point at that, like, that's not deglobalization. There's lots of ships out there and they're continuing to trade. Global trade continues to go up. I think, again, the constraints of reality is that you can't nearshore. It's very challenging to increase US manufacturing for a whole litany of reasons. So, you know, it'll be 2 steps forward, 1 step back, in my opinion.
In a moment, I want to talk about not Trump, but China, which I think is the polarization of the world in many ways is a bigger issue than Trump right now. But Sveining, just before we wrap up on the IMO process, a couple of questions. The compromise that you helped negotiate, it has been criticized for being too much of a compromise, that it wasn't, it's overcomplicated and it wasn't forceful enough. How do you respond to those criticisms?
No, I wouldn't say that. You need to look into what we aimed at, meaning we aimed at net zero. Will framework, the construction of the framework, deliver on net zero? Yes, it will. I think many companies will already now see how it affects the fleet. Will it trigger energy transition? And of course, this is policy and very complicated. Yes, it will. So then, could it have been more simple? Yes, perhaps. But also finding together in a global agreement, you need to find a recipe which everybody can accept. It's like making a meal for many persons. You cannot put in ingredients where some have serious allergies. So you need to find a balance in what you can include. You need to find a way to reduce the GHG content of fuels and how to establish pricing. So because we have both things. But so meaning I would say the deal is good and the deal is strong. And then whether you like it, it's also based on what is your motivation behind the deal. So member governments, they had various motivations into this, various priority, but finding them together, I think in one piece document is, yeah, it's a strong deal. And your question was it China?
I was going to go on to talk about China.
Okay.
There are 10 more nations that need to vote for it in October. Where will you find those?
Me? Or?
No, at IMO.
No, the point is, everybody says it will be a vote. But it's not necessarily going to be a vote. If it's going to be a vote, somebody needs to call for a vote.
Won't someone provoke it? Won't Saudi Arabia or even the US?
Somebody called for a vote last time. The question, will it happen again? We don't know. Now, and then you need to ask those who find the agreement, let's say, not acceptable for them. Will you then call for a vote, yes or no? Will you call for a vote if you're going to lose? The point is, I think now there are, you know, the number of countries saying yes and also analyzing the countries saying yes when they stay together. I think they are quite a strong group. So the question is, if you oppose that, will you really, how large will you then, what type of conflict do you want to make? Let's see in October. I don't know if it will be a vote. It can just be by acceptance and then without a vote, preferably.
I'd like to wrap up talking more about China and the increased polarization of this world. We're seeing that in the trading sphere, in the political sphere, and also in the area of conflict. Obviously, the Ukraine war and the sanctions that were sparked there, but that then has plugged into the long-standing Venezuelan sanctions from the US and on Iran. The greatest expression of this, which I think is more overlooked amongst the the broader public than is understood is the dark fleet. 1,500 tankers are now sanctioned. 25% of the tanker fleet is estimated as sort of trading dark. Rolf, what are the implications today of the dark fleet, which in many cases, not all, but many cases, flying flags that are non-performing or even fake flags, no or failing insurance, poor maintenance, and we don't know much about the crews? What are the risks today, and then what are the long-term risks of the perpetuation of this separate trading fleet?
I think I would like to start with the long-term implications, actually, because that might be very serious. Because we're a part of a global system which have been working well for many, many decades. We have one set of global rules at the sea, not always supported by everybody. US has also historically done their own things, but still, in a way, supported the long-term trend. The problem now, with 25% of the tanker fleet breaking away, is really challenging those global institutions which have worked so well for so many years. Let's take our industry, marine insurance, as one example. It can only work well if we work together, both as competitors and partners in the industry. Insurance is a very interconnected industry. We are dependent on capital from China, from the US, from Europe, and from all the ship owners globally to be able to have a system which has worked for 125 years, covered all accidents at sea for 125 years. And it's these global institutions which are challenged by a divided fleet, and 25% of tankers is quite a lot. And then you can ask yourself, how has this happened? And I think the starting point, of course, is the sanctions. We all support that there has to be sanctions against Russia. But in my view, there is no point introducing sanctions which don't work. And these sanctions, they have not worked. They have been to the benefit of Russia, because Russia has established their own fleet. They are actually having basically 25% of the world fleet of tankers at their feet doing the job. And then, of course, it has not worked. And it's very easy to look at the figures, why it didn't work. If you look at the export of Russian oil, it's about 11 to 12% of the global oil export. Those countries which are supporting the sanctions is 1/3 of the market, 1/3 of the global market. It means that 2/3 of the global market are either neutral or they support Russia in this conflict. And the problem then is that Russia has 12% of the oil in the world, and they still have a free market, which is 2/3 of the world market. So simple maths would have shown everybody that this will never work. And I think one thing which is often forgotten is that a vessel trading from Primorsk to the Middle East or to India, not having any nexus to Europe, UK, or US, they are actually, from their point of view, in a legal trade. Because a company from a country which is not a part of the sanctions does not necessarily breach any law by doing that. They follow the rules which apply to them. And I think in many ways we are thinking that we are pulling a little bit above our weight when we introduce this, and we should have understood that this wouldn't work.
Richard, the Trump administration's attack on Chinese shipping and shipbuilding through both its ports policy and the shipbuilding policy has come as a surprise, although the shipbuilding policy already had its roots in the previous administration. China remains fundamental to shipping. 25% of the world's trade either goes to or from China, only 6% to or from the US. 55% of ships delivered last year were Chinese built. It's fundamental to shipping as a global industry. Where do you see the risks in that increasing attempt by the US to ostracize China, for an industry where China is so fundamentally?
I think it's important to recognise, and I think maybe Andy mentioned this earlier, that global trade is still ongoing. I think the US accounts for about 14% of physical trade movements. And China, by and large, participates in the sort of global rules-based order that Rolf was just talking about. So I think the trade will continue. There's no question of that. Shipping will respond to its charterers and its customers, and we will deliver the goods where, or the raw materials or the goods, where our charterers require them. I mean, I think the likelihood of significant manufacturing jobs being taken away from China or other producers and relocating to America in the near future is not, I hesitate to say pie in the sky, but I just can't see American workers being willing to produce children's toys and bicycles and work in large-scale, low-paid manufacturing, and that's certainly not going to emerge in the very near future. So it will continue. I think costs are going to go up for American consumers. At the moment, we're sitting, as I mentioned earlier, in a bit of a wait and see as to what happens, but I think people are now stockpiling goods to wait and see what bilateral deals are going to be done. As and when they are done, and if the sort of the spectre of the tariffs lifts, then there's potentially going to be a surge, and that's just going to push up demand, and so it's going to push up costs again for American consumers. So the administration's attempt to this sort of more isolationist policy, I think, largely is only going to have an adverse effect on US consumers. I think the rest of the world will adjust, and I think, I mean, you talked about polarization and this sort of, or this sort of triangle between the US, Europe, China. I think Europe and China are trading in the way that we've traded for many, many years, and at the moment the outlier is America. And I can only see in the medium term, and depending on what we mean by that, normalization. I think a restoration of what we were used to seeing, because it's logical, it's commercially rational. China consumes huge amounts of natural resources, and it turns them into finished goods in a way that other nations, by and large, can't do on the scale that they do it. And I don't see that changing in the medium to long term.
Marie-Caroline, would MSC reconsider ordering ships in China today?
At this stage, there's a principle of reality. I mean, the fact that the US is trying to recreate a shipbuilding activity nationally is something that is good. I mean, that's if that's their policy. But there's again a principle of realities. Trade doesn't stop. We will need new vessels with the energy transition. Those ships today are built to a large extent in China. They have the competence, they have the capability, and this is where today that we will still continue building our vessels. However, this is also a good debate to have. I mean, we need more capability for vessel building. But we need also government to realize that this doesn't happen with a snap of your fingers. You need to have trained skills, trained workforce. And if you look at the example of the shipyards in Europe, those had to be, to a large extent, nationalized as well. So the state has to play a role in subsidizing those activities and retaining some strategic assets as well. So this is an interesting conversation to have also with the US administration. Whether that will change our overall strategy in terms of shipbuilding, probably not at this stage. But interesting to see that a nation again identifies or has woken up all of a sudden to realize that having given up completely all of their shipbuilding capability on the commercial side might not have been a good choice.
Andy Dacey, a last word to you, if I could. Was the shipbuilding policy a bit of a taco trade, a bit of a Trump always chickens out, in that the original the original threat was really quite punitive, but actually after a lot of quite successful lobbying by the shipping and shipbuilding industries globally, the policy was significantly watered down and would not be so impactful today.
And certainly, I think that what you're alluding to is some of the changes in the USTR's proposal to allow for ships arriving empty to not be charged in certain categories for, I think it's up to 80,000 deadweight, which I now hear is going to go to 84,000 deadweight in terms of Kamsarmaxes that can arrive and not be charged. And look, I think there will be an impact on Chinese-owned ships that are built in China, and they're going to have to pay a fee, and I suspect that they'll be disadvantaged, and the countries or companies that have Chinese ships will probably just reorient and put their Japanese and Korean-built ships into and out of the U.S. So I think trade will find a way, and I suspect it will raise money, but maybe not as much as anticipated. And then the separate issue of building ships in the U.S., certainly, again, a noble goal, but major labor issues that I think the U.S. is going to have to contend with. And what I'll leave, I suppose, as my final point is that China certainly now is over 50% of the global shipbuilding capacity. I think Chinese owners, if you include the Chinese leasing companies, are scratching up towards 50%. So the world is now bifurcated into a heavily Chinese-oriented shipping fleet and the rest of us. And as China continues to grow, which I think it will, the rest of us will be playing in a smaller and smaller percentage of the shipping industry. And I wonder what the implications of that will be.
Indeed, with that thought, I'd like to thank the panelists for their contribution this morning. And if you'd like to give them a round of applause. Thank you very much indeed. Many thanks to the panelists there. And now, moving on, I'd like to go to Lars Barstad. Lars, if you'd like to join me up here. Actually, Lars, go to the, come this way. Around the end. Lars, I always see you with your small case. So you must have something like the Frontline's nuclear codes in there.
It is. That's exactly what it is.
Please grab a seat. Lars, I'm sure many people in this room will need absolutely no introduction. The CEO of Frontline Management, of course, the Fredrickson Group company, and a very major.
This is what I'm carrying in this.
Oh, okay. Flyers. Just to remind anybody who doesn't know what Frontline is. Excellent. The detailed fleet breakdown. And the numbers. Thank you for that. Thanks for joining us this morning, Lars. I want to talk a bit about shipping, a bit about you, future of the company, and maybe a little about actually the dark fleet issues, some of these darker issues that are hanging over the business. Just to start, I thought that 2025, at the start of 25, it was going to be a great year for the crude market. All the analysts were saying, this is a time to buy, this is a great time to buy. They went a bit quiet. They're now saying it's a great time to buy, largely because it's all been sold off. What went wrong?
No, it's, the rear view kind of mirror is perfect, so you can actually look after the fact and see what happened. Last fall, was a lot of kind of political volatility, and we get kind of numb with what's going on around us. But imagine this: last fall, Israel and Iran were shooting rockets at each other. So we actually thought this was gonna, it looked really, really bad. The effect for the crude oil market was that Iran tried to scramble as many barrels as they could for export. Yep. And those barrels went into the Q4 market. It was mentioned on the earlier panel here that we have different bias around the world to Iranian oil, Russian oil, Venezuelan oil, and so forth. So that actually created in the compliant oil market where Frontline operates a big hole in the ground, because you had sufficient volumes coming from non-compliant sources. And that was at the crucial time, which is kind of going into October, November, December, where certain countries were able to replenish their inventories by way of buying sanctioned crude. And I think kind of if you put this in context, for the last, since Russia invaded Ukraine, the compliant oil trade has actually been reducing, because the incremental growth has come from Iran increasing their exports. Venezuela actually, during the period of exemptions, were able to get their exports from 500,000 barrels per day to 800,000 barrels per day. And the Russian trading system has been super efficient. So actually the compliant oil sources of the world have reduced their market share.
But now we see OPEC Plus reversing the policy
Yes.
against many expectations, frankly, and starting just this last few days, this 400,000 barrels they're planning to start pumping. How impactful may that be?
No, I think kind of the challenge there is that certain parties of OPEC have overproduced already. Yeah. So at least the first couple of increases are potentially just a paper exercise, where you basically just readjust the level of molecules that have been in the markets anyway, kind of. So there hasn't really been a material incremental amount of oil in the market, and kind of early tracking tells us that May was down from April in OPEC exports. And this is the fun thing about OPEC, is that when we talk about OPEC, it's production, it's not export. And the Middle East is now going into the high consuming season, not as material as it used to be in the old days, but kind of a rule of thumb was during the summer months for cooling, the key exporters would run around 1 million barrels per day more to satisfy their energy needs. I don't think it's that much anymore, probably around half of it, but it's quite convenient to increase your production levels when most of the exporting nations are coming into the time of the year where they need the extra energy boost.
You still stick to your policy of principally spot trading the whole time. That still has legs, you believe?
Yeah, it kind of, the proposition we offer to our investors, and we're very investor-driven, is to give the investor a piece of the spot exposure, this really violent cyclical trade of transporting crude oil and products. So that's why the investors go to the stock exchange and buy frontline shares. And then,
do you see yourself then personally and as the listed company as very much as sort of a trader?
Yes.
With the ownership, obviously, in the Fredrickson Group above, effectively taking those bigger investment decisions. You are then actually at the controls doing the trading.
Yeah, that's basically how we operate. But we jokingly try to say that we have this rule of a third. So it's great to be spot exposed as we are now, but we don't want to go bankrupt in every down cycle either. So this is why we try to kind of secure 1/3 of our revenues. We're a leveraged company, so we try to secure 1/3 of our interest rate costs. And then the biggest cost element to how we operate is fuel. So we try to, or work to achieve, to have like 1/3 of our exposure to the bunker fuels covered as well. But this is like you tune as you go through cycles. And I must admit, we actually thought 25 was going to be a great year, and it probably could be. Yeah. But so we're kind of, we're running a spot right now.
How significant was the deal to buy the CMB VLs?
No, it was material for the company, and I think we had a discussion early 2020 or mid 2020, and this is the DNA of any John Fredrickson company, is you have to try and figure out where are we in the cycle. And this was pre-COVID, it was pre-Russia invading Ukraine. And we're basically just looking at supply-demand, seeing that, and this is the only truth that shipping people can actually relate to, is the fact that We know what's going to come into the market of new tonnage, right? And in absolute deadweight terms, in 2020, the order book was less than it was in 2002. So, you know, rewind 18 years at that time, and in absolute deadweight terms. And oil consumption went from, you know, hovering around 80 million barrels per day in those days, in 2002, to now being 105 million barrels per day, right? There's about 42 million barrels per day that trades on the oceans every day. And you know, looking at that the order book in absolute deadweight terms is lower than in 2002, this is an opportunity. And that was where we started the investment kind of voyage, both by way of buying assets, but also by way of you know, taking strategic positions in companies as well.
And it significantly lowered the average age of your ships, which
Yes.
presumably is a trading benefit to.
And also, you know, if you rewind to 2002, that was pre my time at the Frontline. Frontline had around 30,000 earning days per year.
Yeah.
That's what we have now as well.
Okay.
So basically, you know, setting up the company to be able to yield the same returns as the, you know, last super cycle yielded us. Yeah.
Although Frontline has no new buildings on its books, Sea Tankers does. I think there are 8 VLs up there.
I don't know.
All of them being built in China, and none of them with any alternative fueling. What's your view of the alternative fueling question for new buildings, particularly with reference to the likely incoming IMO rules? They're going to put a price on and significantly ramping up the price on conventional fuel in the next 10 years.
Yeah, it's you know, the paradox in our industry, and I've said it already this week a couple of times, is that, you know, we're a transporting service. We try to actually, you know, very efficiently, with a very low carbon footprint, transport large amounts of hydrocarbons to nations that are not as, you know, fortunate as Norway, say. You know, we produce a lot here, and we do that very efficiently. But, you know, we can't do that for free. You know, there has to be a return in this, and the challenge we have with, you know, kind of, you know, managing to comply with the IMO trajectory as it is actually not a big problem, to be quite honest. We you know, we put the stick back in 2008 and created a curve. Coming into 2030, yes, it's going to become a challenge and so forth. But the challenge we have is that there is none of our clients willing to pay more for transporting with a lower emission. So this means that when we do the investment decision, you know, are we going to do dual fuel LNG? Are we going to look at ammonia? Are we, you know, are we going to do this? We can't really put the capex in there because we're not going to get return on that. And back to our investors, you know, they won't accept us doing that exercise either. But you know, it's not all kind of bleak and dark, and it's, you know, I think this transition is ongoing, but potentially at a slower pace. I like to say that, and quite a few people miss this point, that, you know, say if shipping, you know, is about 7% of carbon footprint of the world, we in shipping have actually managed to reduce it, whilst the rest of the world has actually increased. So shipping is kind of not the worst to think about, but I think kind of when our clients start to demand more efficient ships, that actually happened around EU ETS. And this is why, you know, we hate tax. You know, it's not really something we enjoy, but this taxation of carbon actually works because it's money.
It's driven by driving
Yes.
a change in outlook, in policy.
Exactly.
Yeah.
Mm.
Obviously, here in Norway, John Fredrickson is this mythical figure almost in business and in shipping, of course. What's it like day to day working with somebody like that?
It's fantastic. He's you know, in his 81st year, he is still has his finger on the pulse. You know, there has been some transactions in the system. People have been kind of speculating, is John going to kind of retire?
Yeah, well, sold Advance, sold Golden Ocean.
Exactly. no, he's just focusing his effort on what he loves. And
Can you ever convince him to do something he didn't want to do at the start?
No, but the fun part is he's so hands-on, continues to be so. You know, on a daily basis, we have WhatsApp exchanges. So he's a very inspiring guy to work for.
It's interesting. I know you have strong views about the dark fleet, partly because you believe it will the sanctions, if they're fully enforced, they would actually help the clean fleet. But the risks of the sanctions of the dark fleet and what you're currently seeing in the business is something that does concern you.
It concerns us, you know, in so many ways, and you know. If we'd sat on this panel like 3 iterations of Nordshipping back, and somebody had told me that 25% of the tanker fleet is going to be exposed to sanctions, you know, you wouldn't even believe it. Right now, you know, just on the VLCC side, which is our biggest kind of bet in the market, there are more ships on the OFAC list, and believe me, you don't want to be on the OFAC list, than there is on order. You know, who would have thought? But I think, and to the previous panel as well, you know, there are different views around this kind of, and you know, if you go to a big shipping nation further south, you'll find that, you know, they're actually helping, or they believe they're helping the world moving molecules. I think, you know, what was discussed previously on sanctions that don't work, I think everybody understands that the sanctions against Russia do not work. But the political cost of actually sanctioning the molecule was too big. Yeah. You know, so actually it's like, you know, you want the oil to flow, but then again, you know, you want to at least have a position that you know, you're making a point. So and funny part is Europe continues to import gas from Russia. You know, I think it was an all-time high on fertilizers in 2024 from Russia. And the Russian oil is readily available to the market. So, but the biggest challenge here is we now have such a large part of the fleet which is not under the same regulatory framework that we as Frontline kind of respect. And that's a challenge. And you know, a few people have actually started to address this. What about the seafarers? You know, they are actually the people holding this and doing the hard work. You know, the kind of the shipping world has evolved over decades in order to get to this point where we all adhere to certain truths, and then you have a parallel market that don't really care. That's a big worry.
There has to be a fundamental question about so many of the structures around shipping. Just a final thought before we wrap up. It's about Oslo and shipping, well, Norway and shipping. It's very interesting. I mean, this event up here at Nordshipping 10, 15, 20 years ago, this was just sort of engines and things, and you know, Frontline had its party and TradeWinds had its party on the boat down in town, but there was no real mixing. John Fredrickson was quoted earlier in the week as being very angry about Norwegian government policies towards the shipping sector, that really it didn't really appear to want a vibrant shipping business in this city in Norway. Are there real material risks to the shipping cluster here, or is it strong enough to outlive any one particular government or any policies that you may dislike?
I think the challenge here, and I'm trying to be apolitical, but the challenge here is when you try to tax entrepreneurial kind of spirit to death, since kind of entrepreneurship is global, and that's kind of like a public discussion that needs to be had. Oslo continues to be a fantastic shipping cluster. We have an oil heritage as a country, managed that really well. On technology, I think we're very strong. Also on the green transition, there's a fantastic amount of companies that are pushing kind of this change. The problem is, and you're British, so you don't understand this really, but Well, maybe you
nice
can
street.
relate. But just to give an example, and this is close to my neighborhood, a Norwegian man decided that he was going to put solar panels on his house, and then he realized that, you know, how do we kind of harvest the electricity when I don't need it? And then he had this clever idea of digging into his garden, put a battery kit underground, because the temperature is around 3 degrees, you know, as long as you dig far enough, all right? Fantastic idea. And then the sad thing happened to him, that the US company also thought it was a fantastic idea. So no cash flow, no income, only the belief that this is a viable business opportunity. And so he was stupid 2 times. First of all, he had a great idea. Second of all, he accepted a private equity company from the US to invest in his idea. So suddenly he was worth, you know, a couple of 100 million Norwegian kroner. And he ended up in a situation where he has to sell his house to pay tax on this virtual fortune that nobody knows is going to, you know, is it going to be successful? Nobody knows. You know, it's probably 5 years ago or ahead. And that is a problem. And then when you have this, you know, kind of entrepreneurship is global, then you just find a country where you can efficiently set yourself up. But I think kind of Oslo is not going to, you know, going to continue to be there. You know, we're actually, due to our poor performing currency, we're actually the cheapest place to have, you know, top people. Yeah. You know, our income is in US dollars, so there are benefits. But I think kind of meddling with entrepreneurs, that's an issue.
Lars, many thanks indeed for your time this morning. It's been a great pleasure. If you'd like to show your appreciation.
Thank you.
Thanks so much. Thanks very much indeed. I hope you found that interesting. Now, I believe next on our program, it is a head-to-head with Lasse Kristoffersen, if Lasse is Lasse, there you are. Thank you. Although I've been doing this a long time now, I'm not really a public performer. I'm so sorry. Lasse.
Thank you.
Lasse, great to have you with us today. A slight change of tack from tankers and things, but still around a lot of big issues around tariffs and Trump and the energy transition, particularly. The car carrier business has been one of the most targeted in many ways in the Trump tariff trade war, global trade war. What is your view today at this moment of the perspective for you as one of the leading shippers of cars over the next 6 to 12 months?
Yeah, well, I think the only thing we can say today is uncertainty. And I think if there's one good thing is that the world doesn't immediately react to tweets anymore, because they realize that this new TACO thing is that so let's sit and wait for what actually happens. But so in our business, we are both, in shipping and logistics globally, and we do cars, we do heavy equipment, and we do what we call break bulk, funny stuff that needs help to get moved. So on the auto sector, we've seen quite immediate reactions to tariffs, right? And this is you need to think of an automobile in the context of being the most expensive stuff you buy that you don't need to have. Everybody needs a house. You don't need a car. Meaning that it's extremely sensitive to any uncertainty in terms of investments. So what happened was, of course, there was a rush, and you can go all over US, I'm sure Andy and others can tell, in the first quarter this year saying this is pre-tariff sale. And everybody sold like crazy, and we were trying to move cars. And then we saw a very different reaction from the world. We saw Asians seeing an opportunity. And by Asians into the US, we're talking about Korea and Japan. China doesn't have any export of cars into the US. They were just pushing on and saying, we're going to win market shares. While in Europe, they really, pushed the brake and stopped the exports, and we saw significant volumes going down. And that led us to move capacity from Europe into Asia, where well, we're strong on the Asia to the US trade, but also ex-China to the rest of the world, we're booming and continuing to booming. Okay. So I think this is really showing that trade barriers can never stop technology, right? It would not be so that an American consumer will accept to drive around in poorer cars than anybody else. And it happens to be so that the Americans don't produce the cars that the Americans want. And I don't think, I mean, so there will be a short-term impact, and we will see this affecting next month, next quarter, but eventually there's some gravity working here. One, we're all going to drive electric cars, period. They're better, they're cheaper, we're all going to do it. It's just a question of how fast. And let me remind you, 1 out of 3 cars are sold in China, and more than 50% of the cars sold in China today are electric because they are better and cheaper. And China has a massive advantage when it comes to battery technology, and they have a massive advantage when it comes to computing technology. And both of these are the 2 building blocks in modern cars. And then I wouldn't say, I mean, the Koreans and the Japans are good as well, and the Europeans are trying to catch up. The Americans are struggling. The effect here is basically that everybody is losing in a sense. But most of all, American consumers are losing, and American businesses losing, and that's why I don't think this is sustainable at all.
Of course, even before Donald Trump was in the White House, Europe was running scared of the Chinese car imports because of on cost issues, which raises this deeper question about globalization and about the role of China in the world. We'll come on to the impact on the business of carrying cars in a moment, but are there serious questions that need to be looked at about the role of subsidies in Chinese business and the way that it can?
For sure.
What sort of conversation does frankly the West, in broad terms, need to have to come to a more stable place?
Well, I wish I had a good answer to that, right? But I think the subsidies in China, as of the rest of the world, are quite subtle, right? I mean, it's not so that you give money to a company and just go ahead and... I mean, it's Chinese state-owned companies are running without any profits and returns. I mean, that's an implicit subsidy. But what they did was 20 years ago, they realized, you know, electric technology, direct electrification is better than anything else. And that means that cars will become electric. We're going to invest in electric value chains. And they've not done that by just putting up a small factory for a car in China. They basically built a whole value chain. And they went out to the world, basically giving loans and giving funding to a lot of developing countries and getting access to core materials that they could put back and process. And today, I don't know all the numbers, but in average, we're at, around 80% of every component going into an electric car or a battery is processed through China. They don't have the raw material, they have the processing capability, and they're controlling that. And I think what we're seeing now is really, in what I would say, a tectonic shift, where the US wrote the rule book after the Second World War, policed the rule book, China was invited to the party, and they were adamant to party differently than the rest of the world.
Indeed.
And now we're trying to figure out how do we then regulate the world where this rule book doesn't anymore exist, and at the same time, as the one that has been developing and policing it is pulling back and saying, we'd like to close down and basically focus on ourselves.
Obviously, over the last 5 years or so, the car carrier business has benefited from that tremendously. It's been an astonishing boom. There were record rates for quite an extended period. However, that balloon has been well and truly popped now.
But I just want to be very clear.
Yeah.
This boom did not come because China subsidized car manufacturing. It came because they made a better product. And they saw this much earlier than others. If you listen to a podcast with Jim Farley, the CEO of Ford, he said this is an absolute existential fight for Ford. Yeah. And they are better than us. And he had been a couple of years back into China and said they're better on all of these technologies. And whether it's subsidized or not in the past, it doesn't matter. They're ahead of us.
Yeah.
Sorry, yes?
Yeah, but the realities of revenues coming into companies like your own have fallen spectacularly.
Yes.
In the near term, does it remain a sustainable business?
For sure. And what we have, Lars said it perfectly earlier today. We're in a business where we are quite We know well the supply side, and we're all just guessing on the demand side. And I think that guessing has not been less accurate, at least in my time in this company, than it is today. We're sold out today. We're sold out in the second quarter. We have plenty to do. But what will happen in the second half of the year is more uncertain, and it's been for a long, long time. So we don't know. What we do see is that the growth of Chinese exports into other markets are increasing. We see other players, except the US, are coming together as a consequence of this. And I think it's very important to remember that this is really the US putting themselves outside of the rest of the world, likely forcing the rest of the world to come closer together, which you now see with EU and China looking at another deal in terms of how do we structure some kind of a protection for our industry in terms of autos, at the same time accepting that we can't close China out.
You've been a very successful evangelist, and I mean that in a constructive way, for the decarbonisation of shipping for quite a number of years now. And you've encouraged, forced some of the Norwegian ship-owning peers to be more aggressive than perhaps they were comfortable with.
Yeah, I don't know,
stage.
but they signed the deal.
But you have achieved, if I could say so, a great deal, but with quite old ships, quite an aging fleet.
Yes.
Is there a lesson in that for others who are looking to manage the carbon pricing regimes that are coming in, not only the ETS, but the likely IMO? And what strategies should people pursue?
I'm sure, but having said that, a lot of companies, in particular the Norwegian companies, are doing great in driving up the energy efficiency of their fleet. What we did way before my time, so I can brag about this because it was way before me, was to really invest in building a digital infrastructure on our vessels so that we can deploy technology, we could measure effects, and we could have really, really precise measures on everything we put on board. We know how it worked. So we have been able to deploy everything from all the classic things of changing a bulbous bow all the way up to implementing AI on the bridge to support the navigators. And we are able to measure it, and we've been able to take out. So we have said that in our decarbonization map, we have said we're net zero 2040, 45% by 2030, measured from a few years back. And we are tracking that. We're tracking ahead of it, partly because we've been doing well on energy efficiency. We think we have taken half the potential, and we have probably 50% more left. So 20% of that road to zero will be from energy efficiency. The rest is from energy transition. And I think that's really the key here, that yes, the energy efficiency came quite cheap. And to be perfectly honest, we made money on it. And those who don't do it, they are bad leaders, to be honest. And that's why I think most do it, because most of these had a business case. That's not the hard part. The hard part of decarbonization is the energy transition. Transitioning over to a fuel where the market fights against you, because the cheapest fuel is the stuff that Lars and the team are transporting around the world. That's hydrocarbons. And I have nothing against people transporting that. That's what we need to use. But that's really the hard part.
There's been a lot of talk in the last few years about the need for a carbon price really to drive that change, to have that financial lever. At this stage, your view of the combination of the EU ETS and the IMO carbon pricing, do you think it is forceful enough to drive that change, to create that alternative fuel ecosystem from the supplier to the user?
When I was sitting there, I actually planned to do this. I'm going to do it. And I'm going to stand up and do this for Sveinung, because I think it's... I mean, we can criticize that it's a compromise and everything. And I want to quote maybe the biggest political hero in Norway right now, which is Jens Stoltenberg. I mean, he can change an election just by moving home, right? So, and he was asked a few years ago, so Jens, why do you bother? I mean, you're a very principled guy. Why do you bother being in politics? It's only compromises. And he said, do you understand democracy? Democracy is, by definition, compromise.
But that includes compromising with people you don't like.
Exactly. And what Sveinung and his team has been able to do, I don't know if he left, is actually to create that compromise and made something happen despite all of these had different interests. And I think it's fundamentally important that we were able to get to that table. Even without the US, they walked out, and the rest of the world showed, you know what? We believe in a rule-based world. We believe we have a problem to solve, and we're going to solve it. And they were able to put in a market-based mechanism. And on the previous panel, there was a mention of this being, what if when they make rules and we can't comply to it? By definition, we will comply to it, because it's just cost. You can go around, you can still run vessels that are polluting. It's just going to be very costly. That's why you're not going to do it. That's why we will start investing in zero-emission vessels. That's why you will see value chains moving. That's why we are doing it. We've invested close to $2 billion in vessels that can take us to zero. We will never ever build a vessel again that cannot take us to zero. Because we believe this is happening. We believe it's real. We don't believe that this is the right regulation because everything else is worse. We believe it's the right thing to do. And eventually, I believe in humanity. Humanity will do the right thing to do. And climate change is not a joke. It's not something we play around with. I like this quote of Antonio Guterres. I mean, we're on a highway to climate hell with the foot still on the accelerator.
Yeah.
And this is the first time a global mechanism has been put in place in our industry. We should be proud. We should hail it. And then we should, after that, say, yeah, it was not enough, but we'll get it to be enough. It will make a difference.
I think on that inspiring note, we'll leave it there. But Lasse, thank you very much for your time. Thanks very much indeed. Inspiring words there. And now I believe we should be turning to a short presentation before we have the coffee break. It's an address from Lloyd's Register, and it's my pleasure to introduce Michael North, the director for Norway, if he is here. Michael. Thank you. Podium's yours.
Good morning, everyone. I'm Michael North. I'm the director for Norway in Lloyd's Register. And I am, raising, as we've heard, a lot of people talking already today about alternative fuels. And in Lloyd's, we believe, can we reach net zero in 2025 without nuclear? As we can already see, we have a turning point in power. The electricity demand is predicted to double by 2050. That is already without thinking about alternative fuel synthesis and driven both by data centers and artificial intelligence. You can see from the graph that there's a significant split of traditional fuels and increasing renewables. We have already reached 1,200 terawatt hours of electricity in 2024. The latest increase has mainly been driven by nuclear and renewables, and of that, significantly renewables. But we are seeing, as I've said earlier, increasing demands for power in the world, and it will struggle to be reached purely with renewables. So, where can nuclear help? It can help on power generation, providing greater power, as also I'm the director for Lloyd's in Norway. Norway does have a very active Kjernekraft, as it's called in Norwegian, nuclear power debate as of today, both for shoreside, but also in the marine industry. So for shore power, it can just help to provide power for these data centers, for the synthesis of artificial fuels and other areas, with very limited, if not zero, emissions. It can also be provided as transportable power, or power to X. So that can be reactors that can be ported elsewhere where the demand arises for green energy. That can be also on a power to X vessel that can move around the world and then be connected up. And then last but by no means least, it can potentially be for vessel power. There are ships in the world today, state-owned, that run happily on nuclear power. I, as a former seafarer, but on commercial vessels, have also had the benefit of working with former Royal Navy submariners, and we also have similar expertise in Lloyd's today, and those guys are still alive and very active, but not reactive. So for e-fuels production, it can provide scalable power for generating and synthesizing e-fuels where they are needed, including for green hydrogen and ammonia, which will then provide energy sources for vessels in various realms and areas, and can also support the energy transition in interim periods. So, MEPC 83. I don't think any speech today or in North Shipping hasn't referenced MEPC 83 so far. It has given, the IMO has given us now a net zero framework. It's provided emissions limits, pricing, but as Sveinung Oftedal, who's already been referenced, said at the Norwegian Shipowners a few weeks ago, we still have October to get through. I think MEPC 3 is very good. We just have to hope that we manage to get it ratified in October. So, if we believe that, and as we do, that nuclear is necessary for us to reach net zero in 2050, we need to start working now. Lloyd's is a regulatory body and a classification society. We are leading an IACS committee, preparing new rules and regulations for nuclear in commercial vessels. We are part of the Atlas body with the IAEA, developing further regulations and for the application of civil nuclear at sea. And we are a founding partner of NEMO, which is the Nuclear Energy Maritime Organization. But we're not just looking at the regulations, we are also looking at practical applications. So we have achieved government support in many countries. We are developing partnerships with other actors within the marine industry, including, as you can see on this slide, All Seas, as well as others. And we are developing a framework for the use of advanced, safe, small nuclear reactors at sea. So we are influencing this change. We are chairing some of the bodies that are helping and working with the IAEA and others to make the regulations happen. We are working with other technology partners as well. And we see we are seeing further developments and influencing skills, also using externally understood knowledge from, for example, naval and other bodies as well. So, what do we see as the roadmap for nuclear? For marine and for shipping, we see it will be about 5 to 8 years until we have the IAEA Atlas framework. Then it will be approximately 10 years until we can get SOLAS Chapter 8 update. As you have heard probably others say, SOLAS Chapter 8 is currently focused on older PWR technologies, and it needs a good update to be open to different nuclear technologies in the marine environment. And we are working, hopefully, so that eventually we will begin the regional regulators roadmap. That is also so that we make sure that we work with regional bodies and it begins to be more and more acceptable for a nuclear-powered ship to come into port. Floating nuclear, so assets that aren't moving between port and port and permanently moored up whilst they are generating, that should be already possible, especially if it is within a single state, which is the benefit of being a tied-up asset, and you have a regulatory environment that you can work with already there. So, in summary, we believe nuclear is very necessary to reach net zero in 2050. We have other alternative fuels as a way to reach there and transition as well. And you are welcome to download and look up our Fuel for Thought on nuclear if you're interested in any more information. Thank you.
Michael, many thanks indeed for the presentation. Now, we're running very slightly late, but there's coffee outside in plentiful supply. So if I could invite everybody to be back here at bang on 11 o'clock, and we'll kick off our two final panels, which I hope will be very, very interesting indeed. So see you in about just under 15 minutes. Thanks. Good morning again, ladies and gentlemen. If I could ask you to take your seats promptly, we will kick off the second session. Thank you. We do have a hard stop at 1 o'clock, by the way, which is one of the reasons I'm keen to make sure we get as much time to talk about these interesting issues. Now, to start this session, it gives me great pleasure to introduce Mark O'Neill, the CEO of Columbia Ship Management, one of the world's major ship managers who many of you will know. And he's going to address inclusion, the importance of shipping of diversity's oft-forgotten twin. Mark, the floor's yours. Thank you.
Good morning to all of you, and big thanks to Julian and the amazing TradeWinds team. I don't know how they do it. I don't know how he does it, actually, to have all those questions lined up. I have to say that having listened to the last two, or the last panel and the last two interviews, it gives me great confidence that we as an industry can tackle pretty much anything that comes against us with leadership like we've seen on the panels and the interviews. Also, I think it's a testament to the success of North Shipping that we've all got such husky voices this morning and our eye bags are hanging down even lower, so or testament to the parties. Look, this is a subject that I'm incredibly excited and passionate about, as is the organization I represent, the vital importance of inclusion, diversity and inclusion, and focusing very much on inclusion as diversity's oft-forgotten twin. It's a fact that the Columbia Group has 88 different nationalities, I'm reliably informed, of every creed, color, religion, sexual orientation working on board its ships, and 48 different nationalities in its offices around the world. It's also a fact that the ratio of male to female employees in the Columbia Group is 52% to 48%, and 55 women within our organization hold senior management positions. One of them, Claudia Paschkewitz, who is managing director of our German office, is also the director who was appointed 2 years ago to really focus on diversity, inclusion, and sustainability. The other latest addition to our C-suite team, as you will have read in TradeWinds and other publications, Simona Toma, who sits as chair of our C-level, head of our human resource maritime. 5 women within the Columbia Group platform of partners have made it into the top 100 women in shipping as published last year, which I'm incredibly proud of, and we want to get that number even more. It's also a remarkable fact, and I'll stop on the facts in a minute, that 10% of the crew employed on board our ships are women, against an industry average of 1%. And finally, it's a fact that the Columbia Group takes diversity, inclusion, and sustainability extremely seriously, including sustainability and diversity inclusion as core values in 2022, and importantly, running Columbia-wide in education programs so that our people actually understand what diversity and inclusion mean. We are doing our level best to smash glass ceilings across the diversity spectrum, but also glass floors. There's a lot to do, and we can still do better. Now, it's a truism that whenever one visits multicultural, cosmopolitan, and tolerant cities, it's the All Saints churches that are the most frequently visited. People feel at home in those churches, people feel included and identified with, and chances are they leave those churches in a more tolerant and accepting frame of mind. Similarly, for diversity to appeal to the majority rather than the minority, and for us all to succeed in unlocking its true potential, it has to be a broad church, which has something for everyone, not just gender, but for the old, the disabled, the Muslim, the Christian, and people from all ethnic and sexual backgrounds. In short, something for all of us. And the same goes for the global shipping industry. We must see through the barriers of discrimination and build an industry that is fit for all of us, where we don't see disability, we see opportunity, where we don't see gender, colour, creed, but we see future professionals to lead our industry in the future. Our maritime sector faces many challenges. You heard about some of them this morning. But the greatest challenge in my mind, and certainly I think the organisation I represent shares that, the greatest challenge is not AI or decarbonisation or optimisation. It's the challenge to attract motivated, educated, healthy, fit, properly compensated people with a capital P of every creed and colour and political and religious persuasion into our sector. And not only attract them into our sector, but, and here's the inclusion bit, but to keep them in our sector. Because if we don't keep them, and we don't listen to them, and we don't involve them, then they will go out, disaffect, and do more damage to our industry than by failing to attract them in the first place. We'll only achieve that, we'll only be able to keep them if we make them feel welcome, if we listen to them, if we identify with their views and viewpoints and respect those views and viewpoints, and let them contribute and value that contribution. In short, if we include them in our business. I am never going to persuade a Chinese, I say Chinese just for an example, TSI in our technical department, or I'll never get him or her into the diversity church and supporting equal rights for our female colleagues, for our gay colleagues, for our Muslim colleagues, for our older consultants, unless he or she feels that being Chinese is also respected, valued, understood, and just as much part of the Columbia family as the other genres. Without inclusion, diversity risks being woke, window dressing, moral washing. Inclusion makes it authentic, makes it real, makes it attractive, reliable, and ensures that the wonderful power of diversity is harnessed and harvested. We all know international workforce pressures and the labour shortages are there to be seen in our industry. The global maritime workforce is ageing. Younger generations are less attracted into the traditional seafaring roles. Demand for good seafarers is outstripping supplies, and projections suggest that we'll need tens of thousands of more officers by the end of this decade. Onshore roles also face competition from other sectors, offering more flexible, diverse, and inclusive working environments. And crew shortages are not just numerical. They also reflect skill gaps, especially in digital literacy, as I know to my cost, and cross-disciplinary knowledge. AI and digital innovation are everywhere in our business and personal lives, and we need digitally astute youth of today to help us grab the opportunities. You all know, we know, that greater diversity is not a tick box scenario anymore. It is a necessity if shipping is to move forward and compete, just in the same way as fuel transition, renewables is a necessity going forward on the technical side. Greater diversity brings fresh thinking, better problem solving, and ultimately safer and more innovative operations. Now, if we avoid a genre-specific approach to diversity, and rather like the fishermen of old, cast our net as far and as wide as we possibly can to catch the biggest variety of fish, we will be the envy of every other industrial sector, because those sectors are not so exposed to the wonderful variety of humankind which we are. We will attract more quality people ashore and on board our vessels than we know what to do with. And perversely, by doing so, each diverse genre will indirectly benefit from the greater understanding and relatability which such an inclusive approach will generate. People of every sex, religion, sexual persuasion, skin color, degree of mobility and age will sit round the same table, feel valued and appreciated, and better understand each other's qualities. And much of the groundwork has already been done by the wonderful work achieved by Worcester over the past 50 years. The very approach, principles, processes, procedures, and policies which have made gender discrimination so rightly prominent and unacceptable can be and must be widened across the whole diversity spectrum. I genuinely congratulate and applaud Worcester and others for their tireless working in the area of gender diversity and discrimination. But I'm sorry, we now have to do even more as an industry and really focus on every genre across the diversity spectrum. Attract all people with a capital P and keep them at the table with mutual respect and understanding and value one another's contributions. That is inclusion. And that, I'm afraid, is no more diversity's forgotten twin. Thank you very, very much for your attention.
Mark, thank you very much indeed for those very thoughtful and considered words. Now, let me bring up the panelists for our next session, please, which is on the art of the deal and how to win at M&A. So if I could ask the panelists to come up to the left of the stage there, to your right. Thank you. Free seating, absolutely.
Free seating, okay. Cheers.
We credit the audience with being able to work out from the pictures who they are rather than needing to sit directly beneath them. If you're in shipping, you should be able to do those simple things, I trust. Thank you, everybody. It's a sincere pleasure to have such a group of people with us today to talk about the art of the deal. Yes, that was a cliche when I scribbled that note down 6 months ago when we were planning this, and it's even more of a cliche today with the resonance with Trump, of course. But how to win at M&A. All of the people on this panel have been involved in significant M&A transactions, let's put it that way, over the last couple of years. And I want to talk about their experiences, how deals are judged, what the successes are, and whether it's more than price, whether it's more than just the asset, or do companies actually have a value, which is something that in shipping is often not priced into companies at the time. Kristen Sorensen of BW LPG, if we could turn to you first. This time last year, I think your transaction with Advance, with Øystein Kalleklev, was just a twinkle in one of your eyes, but in not much more than a month, you'd done $1 billion deal for 12 ships. What was the principle behind that, and what were the lessons you've subsequently learnt from how it was managed?
Well, of course, for us, it was very compelling strategically to look at that acquisition because we could instantly increase our commercial footprint by acquiring these 12 VLGCs at that time. They were on the water, so if we did the deal in the right way, we could get the ships delivered within a few months. So we had good visibility on that on the market. And then, of course, also as a publicly listed company, you create a bigger and more investable company, especially for the American investors. And we're now listed on the New York Stock Exchange. And I think that has also a great value for the capital market and the investor base in Norway and the US, and of course in the rest of the world. And then for us to make that deal and to justify it, because we knew that we are acquiring these ships at a high point in the cycle, and we wanted to make sure that we didn't spend too much cash in that transaction. It was important for us to use our share as a currency in an accretive way for our shareholders. And the way we could do that was that we were supported by a strong freight market. We had just listed in New York. The share price was trading in a territory where we could do an NAV to NAV transaction, which is very important, I think.
Did you consider buying the whole company?
Yes, we did. We started off, going down that avenue, but since you need to act with speed in these transactions, I think Øystein, I can say Øystein is here now, we agreed. I think it took us one day to say, okay, that's not going to work. So let's focus on the assets, because that's a much easier way of doing that kind of transaction. So
speed rather than price was the determinant in that?
I would say so, yeah, because let's face it, the Avance organization where I also used to work is not a big organization as such, but it's more the legislative and the regulative constraints and considerations that you have to walk through, which takes time. When you buy a company, well, when you buy assets, you can move much quicker.
Did it help having been the former boss of the company you were buying the assets of?
I would think so, yeah.
And
because a part of being able when you move with speed and of course work with Øystein and the team very closely. I knew the ship since I contracted some of them as well.
Give us an insight. What's it like negotiating?
It's very straightforward. I think it's quite well known that we had a few conversations. We met at the airport on the way to Marine Money. And said, okay, I think we should sit down when we meet in New York and take a closer look at this. And I think during that week, we kind of established a framework, which our, let's say, main sponsors and shareholders, being John Fredriksen and Andreas Sommenpaa, could easily approve in a way, and we could move forward in the following weeks. So, but I think a big part of this is trust. And I think you cannot move with that speed we did without having that trust, which was essential for us.
We'll come back to the future perspectives on that in a little while. If I could go to the far end, to Justin Murphy of ADNOC LNS. Justin, you completed your own $1 billion deal buying Navigate Group, but that was actually for a company, and more than just the shipping assets, there was the trading, the trading platform that went with that. What was the strategic thinking behind that, and how did you go about actually completing the deal?
Okay, for us, when it comes to M&A, whether it's JVs, partnerships, or simply growing, I guess we take a look at our vision, which is in the long term to create the world's leading energy-focused maritime logistics company. We're aware of where our gaps are, what the deficiencies are, and in this particular case, Navigate was the perfect solution to fill that gap. So immediately creating a commercial shipping platform with a global presence, which at that time we didn't have. It solved a lot of problems for us. It was the quickest way, rather than growing organically, to get to where we needed to be, particularly in the tanker shipping segment, noting that we cover a very broad range of asset classes, from ports, terminals, offshore, jack-up barges, dry bulk, gas, so that's more narrowly focused on tanker shipping.
How did you go about pricing the ongoing business, the platform side of the business?
Good question. I think not conceding too much ground. Generally speaking, anybody here that's looking to sell or buy, you're buying. You want to highlight the fact that many companies trade at a discount to NAV. If you're the seller, you immediately disabuse people of that notion, telling them that you want to use a DCF-based model, the potential, the goodwill, etc., whatever. So inevitably, you end up, or at least we do, running what we would call a football field analysis, looking at a variety of different metrics or methodologies. And then I think I'm not sure that there's an art to it, but the timing, the particular pressures in the market on the seller or buyer will have a different bearing on where you land on price. So I'm not certain that there's a generic or uniform way you can apply that methodically in every case. It's a matter of judging the circumstances, the context that you're in at that particular time. Yeah.
Of course, when you're buying a company, you're not just buying the assets, you're buying the people, you're buying the culture. and Navigate had a reputation as a pretty hard-charging bunch of traders, very creative, nimble. How are you going to go about integrating that culture into your existing culture, which is very much as a tanker operator and a logistics arm?
Yeah, that's a very good question. And in fact, probably the biggest challenge is actually successfully integrating those. So if we take a step back, some of you may or may not be familiar with the fact that maybe 2 years before, we'd spent about the same amount of money buying a company called ZMI, Zaka Marine International, which is one of the world's largest, or was the world's largest owner of jack-up barges and other offshore assets. So in that company, we also recognized an entrepreneurial, agile spirit. We saw the same in Navigate. And the idea is quite specifically to capture and retain that. So it's not the case that we're going to move and integrate those companies within us. In a way, we're going to feed those platforms with assets, people. So we'll get the best of both worlds. The economic weight, reach that a company like ADNOC has, combined with the entrepreneurial agility, which in fairness, compared to those in relative terms, we were lacking. But now they're ours, they're us, we're one. We're hoping to gain the benefits from those two different parts.
Harris, Placonati-ish, Starbulk, you didn't quite hit the $1 billion barrier, but it was sort of 840, 36-ish. But you bought the whole company. You bought Eagle Bulk, which was a major corporate acquisition of a publicly listed company, of course, to create the world's largest publicly listed dry bulk platform. What were the challenges of completing that deal?
Right. Thank you, Julian, and thank you to TradeWinds for inviting me here today. The Eagle transaction was the first time that we actually merged with an entire organization, versus in the past our transactions were focused on acquiring vessels, which is a much less challenging process. Merging with an entire organization, my fellow panelists mentioned already culture. You have people, you have who use different systems, different processes, different policies. So definitely a lesson learned is don't underestimate the challenges when it comes to merging two different organizations. Of course, we try to combine the best of both worlds. But still, there are hidden costs when it comes to integration of two organizations, especially when you have offices spread around the world, across 3 continents. And it does take time in order to harmonize policies, processes, systems, and create a unified working environment. Another lesson learned for us from the transaction is of course, you always have to perform proper due diligence in terms of the quality of the assets that you're bringing in, their condition, maintenance, age profile, specs, their revenue generating potential. There are some hidden costs that perhaps companies don't estimate substantially when they perform due diligence in terms of operating expenses, for example. So definitely don't underestimate costs of integration when merging with an entire organization, but also hidden costs when it comes to the quality and the specs of the specific assets that you're bringing in.
What are the benefits, the advantages of having one listed company taking over another listed company and being able to use equity, public equity, as the vehicle to create the merger?
Yes, well, this is what traditionally we have been doing. We have been using our currency in order to complete the M&A transactions, and we do see many benefits by creating a larger vehicle, in the sense that we are increasing the size of the company, increasing market cap, increasing liquidity. As my fellow panelists mentioned earlier, this is more attractive to shareholders that want to invest in Starbulk, but at the same time we're able to create synergies. So specifically with the Eagle transaction, by now we have achieved more than $40 million in synergies when it comes to costs, operating expenses, interest costs, dry dock expenses, G&A. So that is also a driver for us when it comes to identifying good opportunities for M&A transactions. What are the synergies that we can have, but not only on the cost side, but also on the revenue side, because by combining commercial capabilities, we're able also to enhance our revenue generating potential. So synergies, economies of scale, but also definitely increasing the size of the company, which is accretive to our shareholders.
Nico Schuers, you're familiar to many of the audience, no doubt, for your leadership of BIMCO for the last 2 years that you've just stepped down from. But of course, you're the CEO of your family company, F-Lights in Hamburg. And having had a period of being quite quiet and reserved in your deal making, the last year has been, year or more, has been very active for you. You sold out of your stake of Graham Car Carriers, and now you're investing in Bell Ships with Entrust. Graham Car Carriers, for starters, that was a very choice deal, wasn't it? The market was steaming hot. There were relatively old ships. The world's biggest ship owner came and offered you a check that you really couldn't refuse.
Yes, but thanks, Julian, for that question. That was only the second half of the game. The first half of the game was getting in, and that was 2 years earlier. And I think there's a lot of learning in that, because what Christian just mentioned, trust and speed is I would add luck, is probably
that's
the
honest.
Ingredients that led to it. I can very quickly talk about it. We've been discussing going public with Graham and our car carriers since 2014, and we were well prepared. And then Corona came and it all stopped. And then I read in TradeWinds that Graham is going public. And my experience in shipping is, and I'm now in shipping for 40 years exactly. So my experience is, if you get cross with somebody or disappointed or sad, go and visit him, see him, meet him, because the industry is so small that you meet again anyway. So you may as well do it quickly. And I went to George Wist's office, the CEO of that company at that time. And I wanted to congratulate him. And he said, and we were not sitting down yet, we were in the entrance, literally in the entrance. He said, I just come off the phone, and we canceled the deal because we don't have enough retail money in the pre-reserves to start it. And I said, well, my car carriers are debt free by now, and I can give you a couple of them, and then you leverage them, and the rest you take as the needed equity, and then you speak with the banks, and it's easy to do. We still didn't sit down, and he said, are you serious? And I said, yes, I'm serious. And he said, well, then you have to leave the office. And I was a little bit shocked because I thought I said something wrong. But he said, no, I will call the guys. I just came off the phone again and ask them whether they like it, and I call you in an hour. And we see whether we go ahead. So after an hour, he called, and he said, we go ahead. So that was for us getting into the IPO at a fairly low price. Mind you, another year before that, I was with Christian at his time in Fernleys, meeting in Spain to find a way to get rid of these ships, to simply find a way out of getting the keys to somebody else. And then the rest was luck. The market boomed. We knew that the market would come. Yeah. Everybody knew the market, the car carrier market would come back. That it would go to heights, six-digit daily charter rates. I mean, that was unheard of and unbelievable. And then, as you say, Mr. Aponte came around and said he wanted to buy it. And then again, we were quick. So it was trust of performance of the partners, trust in the buyer, trust in each other, and speed in decision taking, and luck for having the market.
And now you say that you've been looking to diversify and get back into bulk shipping that you've been out of for a few years, and you're partnering with Entrust. I think it's a 25% stake. You're buying into Bell Ships.
26.
20.
Which makes a small difference.
I'm a journalist and never quite right. Approximately right. What's the thinking behind that, and what do you hope to achieve by that deal?
As you know, the Bell Ships was taken private after the acquisition. We believe it's a fantastic company. It's a fantastic team. To my personal great regret, we lost the CEO, which many of you, I'm sure, will know. And I don't know him well, but I met him and I go fishing next Monday with him, so I'm personally fine with him, but I regret that he left. I'm extremely happy that we have Ivar Mikluvos now taking the helm and leading the company. It's a great team, it's a great fleet, it's Japanese built, it's a very concentrated fleet, Ultramaxes, Japan built, young, and we hope that the market will return and then you can make something out of it. This is compared to real estate, buying a house on High Street, perfectly renovated, great doorman, great tenants, everything perfect. You pay a premium for it compared to other potential targets, but you have a house on High Street. And using that now as a potential consolidator, I think would be a way forward. Some of the bulk companies are undervalued on the stock market at the moment. The good ones, and we have one here, are valued below net asset value, but above their peers and with an explainable, understandable share pricing. Some others are below that, and I think they should consider what is best to do. And Entrust has a lot of money, and we still have some savings.
Obviously, you've been quite a traditional, smaller, diversified company with stakes in various companies, but you've owned the assets. This is obviously a transaction with a fund. You've got a minority stake. That's quite a different business model to traditional owning a handful of ships in a particular sector. What are the, why did you choose to go with this? Was it basically because of the value of the deal, you see?
It was, again, I think, a bit opportunistic. We wanted to go back in bulk. We think asset prices, steel prices are high compared to charter income. And the stock exchange opportunity offered this, I don't want to call it an occasion, but this opportunity, this chance, and we took it.
Yeah. Thanks. Andreas, sorry it's been so long getting to you, but it's been a fascinating few minutes. You, of course, head the maritime team at Hayfin, and you've invested, around $4 billion in the last few years in total, I read. Hayfin in total is about 36 billion around. But what I'm interested to talk about with you a little at the start is your lending to Star Capital about the investment in the buyout of V Group from Advent. You've traditionally invested in the maritime field, I believe, mostly in assets, in shipping assets, rather than service companies, of which V Group obviously is as a shipping manager. What was your thinking there, and what do you see as the opportunity as the lender to that deal?
Well, maybe first of all, I'd like to say, I think the discussion we've had here now is a clear example of what is really some of the key elements of being successful in the maritime space, and that doesn't matter whether you are an owner, investor, or lender, whatever it is, but it is really thinking about relationships, long-term loyalty, and building these relationships. And trust. And I think that there's probably some politicians around the world that could do good in thinking about these things in what they want to try to achieve. And when I say that is obviously because there are all these different links between parties. And I think that really is something that I've always found fascinating about the industry. You build the relationships, you may not do business or deals with people for years or decades, and then you find yourself on the different sides of the equation, as we've heard here today. We are maybe a little bit different than the other parties up here from the point of view that we are both principal investors buying assets and have bought about 100 ships and also bought companies and done excellent joint ventures, including with Norwegian companies like SKS, where, again, that relationship building, where there's a lot more value than just the money matters. But we also help consolidate the industry and facilitate on the lending side. And I guess our advantage is that we can do quite large transactions. The Star Capital deal was about 350 million that we did ourselves. We don't need to syndicate the deals. You can move fast, and you can be a little bit more flexible on the kind of facilities that you're offering, and you can move very quickly. So I think, again, that is certainly, I mean, the interesting thing maybe on the V-Ship side was we already started investing in the V-Ship bonds back in COVID when they were trading at quite low dollars on the cents. And then there was a process where Advent wanted to sell out of V-Ships. And we were both in discussions with Advent, but interestingly enough, also have a very good relationship with the V-Ship management team, as well as the sponsors, Star Capital, who have invested in shipping before. So they're not newcomers to the industry. Again, important that you're dealing with people who kind of know what they are getting themselves into. And that's where, you know, in this instance, we were a lender that provided that facility in a fairly rapid manner, and it meant that we could potentially and hopefully be a part of making sure that deal was going to happen.
Just widening the lens a little, there's a lot of talk at the moment about the uncertainty in the world for very clear reasons. An expression of that, the halving of new building orders, the run rate of new building orders this year is down 50%, more than 50% in fact. In other sectors, people are talking about deal making in the private equity sector, you know, not being able to find prices to complete deals. What is your feel about the months ahead, the rest of this year, in terms of deal making in the shipping space?
Well, I think it's very interesting to distinguish a little bit between people just use the generic term private equity or whatever when they talk about capital. And I think especially when we're talking about art of the deal, and let's hope none of us are going to write a book about it afterwards, but from the perspective of what type of capital are we really talking about? And I think that is actually what's becoming interesting in shipping, that you're seeing more and more long-term capital, infrastructure type money, sovereign wealth funds, obviously linked also to the Middle East, that are coming in and taking longer term views in the maritime space. A couple of reasons for that. It is becoming more industrialized. You are seeing consolidation. Obviously, the technical management business is one where you have seen mergers and probably will see more. But I think in many of the other businesses as well. And very, very importantly is obviously the security side of world trade, where you definitely have an increased focus on bottlenecks and, you know, all the discussions we've had about the Panama Canal, merchant marine fleets and so forth, where it's becoming more political. And I think when you talk about the noise and the issues that are out there, it's really important to look through and see what is it the different parties are really looking for. There's obviously no doubt about, and there was a discussion earlier at the panels about the fact that the US has been over-consuming for years. China has been under-consuming. Yeah. And unless there is a realization from both sides that something's got to give, just because you have a 90-day respite from some tariffs, well, it's going to come back again unless we're realistic about some of the real solutions here. Yeah. And obviously, I think this is where it's bigger than just tariffs and levies and so forth, but really look through what is the real end objective.
Harris, the deal with Eagle Bulk, you bought a company that had a very strong reputation. You've now got this platform, which is the biggest in the market, what, 160, 170 vessels or so. However, the share price development has not been in your favor because the market has moved away from it. How difficult is the conversation with investors who were backing that deal a year or so back and now see an erosion of the value of their investment?
Thank you, Julian. Definitely the freight environment has not helped with our share price, which is trading at a discount to NAV. We do see this, however, as an opportunity because we are in a position to take advantage of the mismatch between freight rates today and asset prices. And in that sense, our strategy is to sell the older, less efficient vessels and use the proceeds from these sales to buy back our share. This way, we create an instant arbitrage at that moment, and we lock the price, which is accretive to our shareholders. Yes, not great developments on the market front and the trading of the share, but this creates also an opportunity for us.
Is there is there a limit to the value in scale? Bulk carrier company of 20 or 30 ships versus 100 versus 170. Why not 300? Why not 500?
Right. Of course, you have to look into all the drivers for a good deal, right? So we are always on the lookout for M&A opportunities, and price is important, and it is an integral part of our strategy to continue growing. Of course, when our share price is trading at a discount to NAV, that makes it less easy to find good M&A opportunities. But the more we grow, the more we see that we can create economies of scale and synergies. Yes, as I mentioned before, we have seen opportunities to reduce our costs, both on the operating expenses, but also G&A, interest costs, dry dock expenses, through the merger with Eagle Bulk. As I said before, we have achieved more than $40 million in cost synergies. So definitely there is a benefit to scale. Now, you also need to find the right point after which you're not able to control also the organization, unless, of course, you decide to have a more flexible organization and outsource the management of the vessels. So, yes, you continue growing the fleet, but you don't need to have the people, the offices, the systems, the processes in place to manage an increasingly growing fleet. Our strategy has been to manage everything in-house. Because we see that we get benefits from having control of the operation, having our own people. So to answer your question, we do believe that, yes, there is a limit. Now, if, of course, we do find accretive M&A opportunities, we would consider also outsourcing management of the fleet in order to take advantage of those specific opportunities.
Christian, the LPG market has been under pressure recently, and not least because of Trump and really kind of unexpected tariff whack on the back of the neck. But it's also looking overbuilt as well. Where do you see your growth trajectory coming in the next few years?
Yeah, I think, okay, at the moment, the VLGC market is quite healthy. You know, we're printing like, I think it's like $50,000 per day as we speak. Which is in comparison with the cash break-even of 2025, so it's pretty healthy. I think, like you say, there is an order book, especially in 2027, which we are, I would say, cautiously following. So I think for us, and coming back to size, you know, we invest if we believe we can create shareholder value from that investment. And sometimes you just should sit back and let the assets generate revenues and do the work, basically. So I think we are at the moment at the stage where we're happy with our size. And we'll see what happens. I think if the markets turn weaker on the back of the, let's say, new buildings coming in to the market in 2-3 years' time, okay, we'll see what happens, which is the phrase of these times, isn't it? We'll see what happens.
Indeed, indeed.
And maybe just adding to that, I think on the size point, I mean, it does also depends on whether you're a listed company or not. And clearly shipping has an issue from a listing and scale perspective that you've also seen recently, actually, some companies being delisted by some of the larger shareholders because it just isn't efficient. And if you compare tech companies with some of the entire universe of shares in shipping, well, it's still a small percentage. So I think, you know, they're not here today, Savarese, I don't know if he's out there, but certainly from a...
He said he was too busy.
Too busy, okay, but then we'll speak for him. Now, obviously, that is, again, an attempt to create a pretty large company. I guess they have 250 vessels, whatever, but also more free float, which was obviously the issue they had before, and they managed to get a bit more out of it. So it comes back to not just the pricing point of why these things are done, but also a lot of the other strategic longer-term values you get out of it. And obviously timing is pretty critical.
Justin, from your desk running the strategy, what does the picture of ADNOC L&S's future growth look like? How will you be using the operating platform of Navigate actually to build the company in the next few years?
Yeah, well, in short, I'd say it looks very bright. So I think over the past this week, And in months past, people are focused on a lot of the negatives or the challenges, which we can't doubt that there have been some challenges. The reality is, though, that we see huge expansion in LNG liquefaction. We see the parent company, again, XRG, which maybe a lot of you might not know, start following them on LinkedIn, is an $80 billion company created by ADNOC with the intention to become the top 5 gas player globally and number 3 globally in chemicals. So for us, as an associated, an affiliate company, that represents a fantastic opportunity. Also, we've built a platform that we have a mandate to grow, but of course, buying vessels at any price, at the prices that they are today, in some cases isn't that attractive, which is why we've created a platform that can pool vessels, build up a TC portfolio, and then move in or out of sell and purchase markets, new building markets. I think when I look at some of the segments, bearing in mind, looking at vessels as small as landing craft that some of you might not be familiar with, that cost $2 or $3 million, all the way up to VLCCs and LNG carriers of $240, $250 million. There will be the level of opportunities is going to be unevenly distributed, but in some of those areas there will be opportunities, and we'll seize on those.
Nicholas Schulz, can I just come to you as a final question, because time is running short, and it's another change of tack into the sort of the geopolitics of the situation. We were talking about the dark fleet earlier, and this is partly with your BIMCO role. What more can this community do to address the risks and dangers which are being presented by the dark fleet in the threat to the rules-based system that everyone is relying on in shipping?
Yeah. Let me very, very briefly comment on size, because I find this very important that there are different perspectives on this. We have a private fleet of 40 vessels, which we manage and own under FLIs, including a couple of ships we manage, for example, for companies like Yara. So you could say, why are we not outsourcing that to larger operations such as Valem or V-Ships or what have you? And we don't do that because we believe that the in-house management gives a quality advantage, which allows the not harvesting of all synergies. We don't see synergies on a ship level. We see synergies on a management company, shore-based cost level. We don't think that harvesting those are worth a compromise on quality. And if you do ships, we do mainly LPG ships and car carriers, some container ships. They are very quality-oriented ships. So I do know that this consolidation in shipping is important, but I still believe that the smaller companies have a very, very good position to defend. On the dark fleet...
Just briefly, if you could, on the dark fleet.
Very briefly on the dark fleet. There's nothing new to say about it. We call it parallel fleet. BIMCO says it's not necessarily bad just because it is managed, classed, insured by new players. But of course, we have to be very, very cautious that these new players are living up to the quality standards, and there should not be any compromise with regards to MARPOL, SOLAS, and all these types of things. So be strict, but be open towards new.
Thank you for that. And to all my panelists, thank you very much indeed for your contributions. It's been fascinating, some great stories and great insight. If you'd like to show your appreciation, please. Thank you. And if you'd like to... Thanks, everybody. Now, with a quick change of pace, it gives me great pleasure to introduce the stage Mr. Vangelos Marinakis. Mr. Marinakis, please, this way. Please, Mr. Sayers. Please, I've got the far end. Please. Mr. Marinakis, welcome to this TradeWinds Shipowners Forum. I was about to say you're a huge character in shipping with a huge reputation, and these seats are too small, so my apologies. But you do have a significant reputation in shipping, in football, and in media now in Greece. I hope we can talk a bit about shipping, but also like to dip into some of the other issues, because I'm sure that many people here would like to hear a little more about you, the person. To kick off, could I ask you, this session we're going into is the future of energy shipping. And you've made yourself something of a poster boy for the fueling transition at the very least. You have this huge order book of 80 plus ships, nearly all that are LNG or ammonia fueled, or even some are battery hybrid fueled. What was the point that you decided that that would be your unique business angle?
At the beginning, we heard a lot of guys in the industries, from the oil majors, politicians, classifications. Nearly everyone was very optimistic regarding this transition period. Environmentalists, as far as the climate changes, and we must act very quickly. So we thought that going forward, when market had allowed us over the years to realize profits, is to reinvest part of this money into the new technology, and especially in the dual fuel LNG. Okay, it was extra cost, let's say, for the dual fuel tankers, the dual fuel containers. And of course, we have done some similar features on PSVs with batteries and stuff like this. So we thought that also we did it, and we were one of the very first to do it with the CO2 carriers. So in every vessel, we calculated between, let's say, $15 to $30 million extra for having this.
Significant investment.
So it's a significant investment. So far, being honest, we have been extremely disappointed because we don't see anyone pay.
This is going to be my point. Will it come?
But when you build a vessel for the next 15, 20 years, you think that in 2, 3 years' time, 4 years' time, you will realize a premium. And on the other hand, if you can afford to wait and you have your cash reserves to be able to survive in case things go wrong, plus you have paid also premiums that you don't get paid for it, I think that's a matter of time. I'm optimistic, I'm still optimistic. Of course, at the beginning, I was much more optimistic, but I think that is a matter of time. Of course, now with the Trump administration, this might also go further down the line. But again, I mean, we are there for the long time, not just for the next 2, 3 years.
I was talking to Lars Barstad of Frontline a little earlier, and of course, all their ships, apart from a few they acquired from CMB, are traditional fueled. The sea tankers, new buildings being built in China, they're all traditional fueled. You won't be building any more traditional fueled ships? Or is that a possibility?
We do some. I mean, recently we did some because we wanted to balance it. And I mean, we did with feeders, 1800s and 2800s, and with some VLCCs.
Are you disappointed with the proposed IMO rules actually bring effectively penalties on LNG fueling from 2031 or so? and it's going to be ahead of the
We are
ETS.
because you know, for us, LNG, dual fuel, and also LNG vessels is a bet, and a bet that, as I said, we need to be patient. We didn't expect it, but still, there is a significant premium that we'll be getting, and we cannot have it all. Let's put it this way. So
I was looking
quite relaxed about it.
I was looking at your new building list. You're nicely hedged between China and Korea, aren't you?
Yeah.
You've got a lot of the LNG carriers are in Korea. There's quite a few of the tankers in China. Would you think at least twice before ordering in China today because of the frictions with Trump between the US and China?
I would think twice if we go ahead with new buildings or not. But I wouldn't think twice if it's China or Korea. We have traditional relations for many, many years with both countries and the yards there. And I think my personal opinion is that as far as the tariffs are concerned, it's a matter of time. And when I'm saying it's a matter of time, I think that everything will be stabilized within this year. Of course, there will be some tension, some hard negotiations, some extra measures, some announcements. But at the end of the day, I think all this creates opportunities in the market. And if you are there and if you are in front of competition, you can take advantage of all this and make our business even more exciting.
And you still believe in the of having a portfolio of sectors in your business as well, rather than being a single line. That builds in obvious strengths. And
I think that when you are in the market and you have experience in various sectors, it helps a lot because in very rare occasions we had all markets not performing or all markets performing. So sometimes we see the opportunities in LNG space, sometimes we see it in containers, sometimes in tankers. So for me, this gives us an extra advantage to try to take advantage of opportunities, and when it is a big company and we can provide, let's say, a number of ships to our charterers, to a number of ships to negotiate with yards, gives us an extra advantage to get a better price, to get a better charter. You know, for example, from the beginning of the year, everyone is very conscious with all discussions about tariffs, about embargoes, about all this tension. But we have done over 300 years of time charters. So, you know, it's good to say that everyone is very conscious, but at the same time, there is opportunities, there is business there, and I can say that we enjoy it also, you know, this tension thing.
I'd like to talk a little about you and leadership and influence and power. You clearly achieved a great deal over recent years, dating back to the first IPO in 2010. And I noticed that year, TradeWinds, we had our first power list. And you were in the auspicious number 74, I think it was. I don't think you'd be 74 today, if I may say that. In Greece, you're regarded as hugely influential, partly through your business interests, but partly the media interests and football, of course. Are you proud of what you've achieved to today?
I'm proud with what I have achieved outside Greece. because our business is very international, it's global, and is the main source of our income. In Greece, now the media company is also listed in the Athens Stock Exchange. Football, Olympiacos, is more a passion than business. We're not expecting to make money. We're building a very good brand. And, you know, it's a team that is so popular with millions of people. So you talk with your heart, you talk about passion, and there is no price on it. So it's not that it belongs to me, it belongs to everyone.
But with football, the old joke about how to make a small fortune, start with a big fortune and invest in football.
Right. Nowadays, maybe this is the case because you compete with states or with very big US funds that they have acquired teams. But still, if you have good managers, good scouting, and again, you can be a bit in front of the competition, you can still get results.
Your emergence over the last 10 or 15 years or so means that I think that you're still seen as being something of an outsider, something of an enigma to a lot of people in shipping. How do you feel about your own role and reputation in this?
This is the best thing that can happen to anyone. Because when we have seen it many times in business, in football, in our daily life, when the competition hasn't done their homework properly, and they might underestimate or they don't believe in certain individuals or companies, that gives you more space to perform. And but when they realize that the opponent is much stronger than what they expected, then they spend more time, they are more careful, and makes it more difficult. So, you know, for us, to be an outsider or sometimes to underestimate our power in certain sectors, it's acceptable, and I prefer it.
I must ask you, you've obviously fought and won several legal battles over serious issues over the years.
41 battles for where?
They are some of the legal issues you've fought over the years.
You know,
they're historic.
No, it's not historic. It's bullshit. You know, it's as simple as that.
I wanted to ask
but you know, it's good for the audience to hear that. In Greece, when someone wants to create a headline, or there's an investigation about anything, about your shoes, about your socks, about your glasses, about anything.
Yeah.
And then you have the papers saying that he's investigated, but if you do the proper translation, which is not what we mean in England when someone is charged or is investigated, you know, you see all these headlines. Now, I can tell you one thing, that I have never ever been found guilty on anything. And 99% of what everybody has read about match fixing, all this, has never been in court. Has been an investigation that 10 years they are talking about it, and then when it doesn't go even to court, no one bothers. But they have done all this damage. Of course, this is good for some of your competitors to say this, that, and the other. But at the end of the day, all the serious people in the industry and the people that they really have done their homework, have investigated what is the truth, they're laughing. So it's good for people to know.
Indeed.
So it's not 42, it's not even 2 in reality. And then even the ones that once went to court, it was just a case of nothing. It was just to, to have all these discussions and all this, to acquisition and all the bullshit.
A final question just around shipping. There's a lot of talk at the moment about while prospects for many markets, the tanker market, the big tanker market in particular, LNG, and the container business should be good. The uncertainties and the disruption of the Trump tariffs has created confusion and chaos. Where do you sit in the sort of longer-term perspective of the state of the industry and the state of that trade? Do you fear this could be some inflection point, or do you believe that the world, the rest of the world, even without the US, will actually show enough growth to bring the demand to keep the industry stable?
I'll tell you, as far as containers and as far as the containers from 1,800 up to 5,000 TEU. The fleet, 20% of the fleet is over 20 years. By 2030, 45% will be over 20 years. Plus, after a long time in EEC, it's very important now, the speed consumption, the emissions, and how they calculate the penalties and the premiums. So now the time has arrived. And it makes a huge difference, even in small ships, to have new vessels with much better consumption. And when we say much better consumption, even in these smaller ships is 30%, 40%, 50%. We're talking about phenomenal differences. So I'm very optimistic that a lot of the new ships that are coming, they will find a home, and for the years to come, it will be a good charter. They will enjoy good charters and good employment. As far as LNG is concerned, I mean, we see that there are a lot of production that is there, and they're waiting for license that has been delayed. Also in the United States, with the previous administration of Mr. Biden, a lot of these licenses, they were put on hold, and we expect them in the next 12 to 24 months, all of them to get the license and the approvals to go ahead. The same applies also in Australia and also in other countries in Africa and in other places. And of course, there are a lot of LNG there in Russia, and when this war will end in 6 months' time, in a year or a year and a half. I mean, already it's 3 years, so it's a matter of time. And of course, there will be a tremendous need for this LNG to be transported. So for the years to come, I'm optimistic.
Structurally, you're very optimistic that the fundamentals are.
So the fundamentals are there, and I think that we are in the right business to grow more, especially with new technology vessels that even if there has been a delay, we'll get the premiums that we need in order to make the investment worthwhile.
We must wrap up in a moment, but before we go, the most important question, of course, is you were clearly very disappointed that Nottingham Forest didn't make it into the Champions League this year. In fact, you made headlines around the world.
Again,
can Forest make it into Europe?
Again, you know the headlines that you say. So it's good to everybody to hear this. What happened, there was a match, and it was around 10 minutes before the end, and one of our players got injured. The doctor gave the green light to re-enter into the match. Of course, the player was in a very bad state. It was a big mistake of the doctor to give the green light. So for 10 minutes, I was shouting to them, you know, even if we play with 10 players, it's better than having a player suffering just to stand, not even to be able to walk. So it was, and as soon as the match is finishing, he's collapsing. So, you know, human life is first. I don't care about the result, the coach, all this, you know, it's football. But when you see that there is a human life in danger, then you have to wake them up and do their job properly because, you know, someone could even die. So that's why I went in to check, first of all, his health and also to say to the doctors that they have to be careful. And everybody said that...
But your Cretan heritage meant you maybe said it rather robustly.
Okay, robustly. Sometimes you have to be loud so they can listen, they can remember not to make another mistake again. So it's, so that's what happened there. And Nottingham Forest, 30 years, before 30 years they were in Europe, and 40 years they were the champions for 2 times. So the whole atmosphere in the city, you know, they live their dream. And
Gary Birtles is one of my childhood heroes.
And of course, everyone is very happy that the team is back in Europe. I wanted the team to be in Champions League, but this is football. Next time, we will be there.
Evangelos Marinakis, thank you very much indeed. If you'd like to...
We'll go from there, yeah.
Thank you. Thanks a lot, everybody, and apologies for going on just a few minutes over the slot, but it seemed to be worth it. Now, for the final panel of the day, it's this concept of the future of energy shipping. So if I could ask the panelists to come up, and if you go to the right and up there, please. Thank you. I'll just rearrange these. We have 6 panelists for this one. So anyway, it's fine. Morning, Wilson. And who are we missing? Mikael. Is Mikael anywhere? Oh, Mikael, thank you. And Andrea. It's coming. Mikael, good morning. Gentlemen, good morning. I need to handle this like the vicar, I'm afraid, today, because we've only got 6 seats. So I'll be standing and talking to you. Thanks very much for this. And we want the plan is to have a quick tour all of the future of energy shipping. Obviously, energy supply, energy security, as well as the energy transition is the center of so much in this world. And energy, of course, fossil fuel shipping is still the biggest chunk of the business. It's in terms of volume, it's 38%, according to recent figures from Clarkson. So 4.5 billion tons of oil and gas and coal being shipped. So it's a hugely important. Could I kick off with the big picture, which is the potential Trump disruption and the impact on not only trade but the energy transition? And perhaps if I could turn to you, Andrea, first of all, from Trafigura, what's your perspective on the potential impacts, both in the short and the longer term, of the current uncertainties?
Well, first of all, I would say disruption, whether induced by geopolitics, environmental events, weather events, it's here to stay. It's going to be our neighbor for quite some time. Yep. So we may well learn to coexist. When I look at the role of Trafigura today in the market, what do? We are actually acting as a shock absorber. And whenever you have disruption, we help our clients manage this disruption, and we help them get the molecules that they need at the right time, in the right place, with the right blend, in the right currency, and so on and so forth. whether the Suez Canal closes, the Panama Canal closes, whether sanction hit a particular flow, and so on and so forth. When we talk about disruption, we should talk about regulations as well. We have a lot of regulations coming up. It's very important that every company navigates them the best possible way, and we think that the best way to do that is to be as flexible as possible and build as much optionality as possible. So when we're looking to hire tankers, we're focusing more and more on tankers that can give us flexibility to switch fuel, whether it's a dual fuel LPG vessel or a dual fuel ammonia vessel. We're trying to build a portfolio that can offer us as much flexibility as possible.
Mikael Skoff from Hafnia, could I ask you, is the question that the market faces more not about changes of supply, which is relatively fixed, obviously it changes slowly over time, demand is creeping up, creeping down, but it's about the functioning of the business, the trading routes, obviously the complexity, but also the actual, the customers and the suppliers, moving parts and having greater frictions, which is obviously demanding, more demanding of the ship owner and ship operator.
Yeah, no, I think it is, and it's interesting to listen to the other panels as well about how people see the effects of the whole energy transition overall, right? Because it obviously is very different from one sector to another. And I think you and I have had this discussion before about tankers, that on one hand we obviously have to deal with the fact that there's a transition also in terms of propulsion and the fuels we use and how we kind of deal with that. But then there's the more important one, which is the long-term strategy is, for how long time do we think there will be oil to transport? And I think Vangelis Marinakis mentioned it as well, that we're making decisions for 20, 25 years ahead. And new builds being delivered in 28, 29 does give you what I would call strategic rethinking about, what is your view going forward? And I think for us, having gone through this many, many times, it's uncertainty is not necessarily always bad, depending on how it's been created. I think oil demand in general has been pretty resistant to, even financial crisis and other geopolitical events. I mean, demand has still kept up, as you said, over the years. So I think that the real issue is the speed of that whole transition. And I think it's difficult as a ship owner to try to second guess, what's going to happen going forward, rather than maybe stay close to your clients. So when Andrea is mentioning about what they're looking at, I think that's as much as a guideline for us as well, is that we could make a lot of investments. At the moment, they probably won't make sense in the future, but if we can do it in conjunction with your clients, that's how you slowly but surely go through the transition. Because we shouldn't forget that there's obviously an existing business that, in our view, will be very attractive for a very, 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 very long time.
At least 25 years, frankly.
Exactly. So I think from that perspective, I think it's important to not to be caught in a time trap where you make too many guesswork predictions, rather than maybe trying to do it in accordance with your client's requests.
Svein, is the resilience of your optimism about the big tanker sector still strong?
Indeed. So we, of course, spend a great deal of time on this, trying to understand it, because these are very expensive assets, and to allocate capital to this, you need to have a decent level of confidence. So we spend time on this peak demand thesis. I think there's not one single answer to that.
Doesn't Goldman Sachs all move it out another year every year?
So I think people, of course, they talk their own book in general in all business, including our industry. So I think there's some credible data suggesting that peak demand might occur sometime in about 10 years' time. But I think the key finding for this was that how will it play out? Is it sort of falling off a cliff, or what will it do? And I think it's also credible research suggesting it will plateau for quite a long time. And keep in mind that the world population is continuing to increase. So maybe on a relative basis, then oil consumption is decreasing, but in nominal terms for our industry, it might plateau for quite a long time. So for us, this meant that we allocated $500 million last year for new investments coming next year. And we think this looks very good, and we spend a lot of time with our customers. It's a very important source of information to understand how we can help them, what they need, and so forth. And they offered us great support on the decisions we are making, and give us encouragement that they want to do more business with us. So I think things look quite constructive.
Just on those new buildings, they are in China?
They are built in Korea.
Oh, my apologies, but they are not alternative fuel?
No, so they are conventional fuel. We're building with a new engine.
Did you consider alternative fuel?
Yes, we did. We also did a lot of work on this. I can spend a moment on that, but these are conventional fuel, but they have sort of tri-class notation for alternative fuels if we need to make those investments in the future. But we will not do those investments speculatively. We will do them in response to a market that proves it's there, or a customer will need it for sort of long-term employment. But back to this alternative fuel, our study focused not so much on the technology, whether this is workable on ships. We were keen to find out where is CapEx being committed to build production facilities for blue methanol and green ammonia. And what is the cost of these plants, because it's giving an indication what the cost of the fuel will be. Further, we looked at where geographically are these plants and how do they plan to deliver these fuels to the market. And I think the takeaway from this was quite clear, that it's going to be very expensive, and it's mostly in the wrong place. And the energy content of these fuels are quite low, obviously. So I think at least for large tankers, we will probably be the last frontier, who will. But there are lots of other parts of maritime industry where you can adopt this easier in coastal transportation, where there's ferries, ro-ros, smaller container ships, things like that. That's the low-hanging fruit, and I think that's where we will see some penetration with these fuels. But for what we do, where we are maybe 45, 50 days at sea, there's not many bunkering stations on the way. So it's not unlikely, I think, for us, which gave us confidence to stay with conventional fuel for now.
Oiskin Callicleffe, could I turn to you? And first of all, many thanks for making a hole in your gardening leave to take part in a shipping conference.
I'm not particularly good at mowing the lawn, so I even try to bribe my son to do it. So.
No, it's
very good suntan though.
But as a you are notorious as a very well-argued optimist about a lot of things in this business. Has even that been under pressure in the last few months with the overtones of not in the specifics of Trump, but what that represents globally?
Yeah, so if you look at the Oslo Børs Shipping Index, so 2 years ago, everybody on Nord Shipping was very happy because the index was about 250. It was up from 100 2 years prior. Last year, during this year, time of year, when I did the deal with Christian, the shipping index was at 450. Today it's like 350, so kind of most ship owners today are complaining that they don't get the necessary pricing in the equity markets, except for you, Svein, you do get it though, and that's why probably you can commit to $250 million capex commitment. So I think equity markets today are more challenging. The stocks, shipping stocks fell off a cliff on 2nd of April. 1st of April, I kind of went into garden leave and started kind of investing invested my own money, and I lost 20% of my net worth in 1 week. So, but it bounced back very quickly. Shipping stocks now is basically on par for the year, which is quite amazing when you're thinking about all the new stuff that come up out of the White House. So, but there's a lot of different, tankers are doing well. They're not really making that much money yet, so they're more priced on expectation and OPEC putting barrels into the market. Dry bulk market, only company that gets good pricing is Bulkers 2020. The rest of them are really suffering, especially on the smaller size. LNGs,
What happened there? I mean, you locked all your flex ships away, of course, but
yeah. So
the spot market has.
Yeah, spot market is like $30,000, so 35 maybe. So it's pretty dismal. But it's like 90 ships for delivery this year. It was more than 60 last year. So it's kind of a repeat of the 2014, 15, 16, 17 story, where you had a good market after Fukushima, way too many orderings. And then we have a repeat of this cycle. So what we tried to do in Flex was to fix out all the ships. We managed to fix 3 ships on long-term charters last October, November, before the market fell off a cliff. And we basically converted that share into a bond. So I'm more a share guy than a bond guy, so I felt it was a good time to leave then after selling the Avance fleet.
Carlos, many thanks for joining us today and giving a perspective from outside Oslo and outside Northern Europe indeed. How resilient is your outlook for the tanker markets in the short term, your tanker markets in the short term, but then the longer term energy transition piece?
On the short term, our sector now is, of course, very impacted by many geopolitical factors, which we have benefited from greatly. Of course, the war in Ukraine being the main one, and how that influenced trade flows out of Russia and into Europe in particular. But of course, initially to a large extent, maybe today to a lesser extent, the attacks by the Houthis in the Suez Canal has been impacting the sector also very much. I say less so today from a product tanker perspective because there has been more cargoes which would usually have been transported by our vessels, which are now moving on crude tankers, in particular on Suezmaxes. There was a surge last summer in these trades, and it has since fallen a bit, but it has continued nonetheless. And the order book grew. There's an acceleration in deliveries in the coming quarters. But if you look across all tankers, it's still not particularly worrisome. I mean, we are still talking overall fleet growth of less than 2% this year and just over 3% next year. And there are a lot of connections between the crude and product tanker sectors. Of course, the fleet growth is much lower on the crude tanker sector and higher on the product tanker sector. But I think it's correct to look across all tankers, given the strong interconnections there are between these two types of vessels. And so I think the outlook is still broadly positive. Of course, in addition to what we mentioned, there's also an increasing number of vessels which are being sanctioned. That is reducing the pool of vessels which can be engaged on sanctioned trades. I was in Brazil last week talking to the traders. Brazil has been very involved in importing diesel from Russia. And a lot of the companies I talked with were expecting that it is going to be more complicated to continue importing the same quantities from Russia because of the new sanctions in particular that were announced recently by the EU and UK. Of course, this has led to an increase in S&P activity recently, with possibly more vessels which are not sanctioned being bought by players which are engaged in such trades. So this will correct over time, but it will tighten the market for the non-sanctioned trades, which I believe is also very positive for us. And then longer term, there are lots of also regulatory issues which we will be confronted with, which should incentivize scrapping, which should come anyway because the fleet is aging very fast.
I was about to, let me stop you there. I was just going to put this to some of the other panel about the fact that supply is under control and the growth isn't so fast. And we could go to Jan Ole perhaps on this. However, the fleet is aging rapidly at the same time. And with the incoming regulatory regime, particularly around fuels and the added cost, there will be an incentive to order more efficient fuels, as ships with efficient fueling systems, as you're talking about. It's fine. Jan Ole, is there going to be a pent-up demand of new building in the next few years, not to blow up the market, but actually just to replace the ships which will not be functioning in this tighter regulatory regime?
You know, I get nervous now with this, with all these guys next to me answering this question. But I think the age profile definitely supports and sort of mitigates the risk of ordering, because right now I think on tankers in general the age profile is 16 years old. In 10 years that's going to be 26. Yeah. Although tankers tend to be better maintained due to vetting and all of this than other types of vessels. You know, at some point it comes to an end, and it's adding to that, as you said, Julian, the energy efficiency part of it. I think you have a downside protection when ordering. Looking at the order book right now, as Carlos mentioned, it's even in 2027 it's still 5%, just enough to replace what's normally on scrapping. So basically, today with the current order book, you're flat. Right? So there will be need for new tonnage, whether you think oil is going to be transported 10 years from now or 20 years from now.
But there's obviously a risk element to you as a lender in that, isn't there? The aging fleet with the clear increasing physical risks, as well as the inefficiencies that fleet is going to bring. Where do you see your clients moving? Do you believe they're moving fast enough to renew their fleet, to actually equip it for the future?
You know, we come from a period where there's been very ambitious targets for the fleet, and which may not have been realistic. Right? I think what we are seeing at the moment is it's a more bottom-up, more realistic approach, taking into consideration technologies available and the supply of new type of fuels. So I said it before, we are fuel agnostics. You know, we trust our clients to make the right decisions. They are really the ones who knows what works or not, and we choose the clients that we think will have a cautious approach to this, and then we trust they will make the right decisions, really.
Can we just talk about the question of the dark fleet, or the questions that arise from the dark fleet for a few moments? I think the consensus is in shipping that while sanctions against Russia because of the invasion of Ukraine are right, morally right from the West's perspective, their effectiveness on the shipping operation has been deeply flawed, partly because of lack of enforcement. Fundamentally, they haven't had the levers to be able to manage it. Mikkel, in the products tanker market has been right at the center of that because of the types of cargoes and the trades. Your perspective of the ongoing risks of the shadow fleet development, because it appears it isn't static, it's continuing to grow. It's now 25% of the fleet, when it's a third of the fleet, when it's more.
Yeah, no, I mean, I think, I would imagine we all share the same view here that it's become a massive problem in general, and I think we should probably separate the two reasons, because the most important one is actually really on the safety part. So I think one thing is the commercial part, and we would probably often be accused of speaking our own book by saying we should get rid of a dark fleet, etc. But the reality is that it's still part of our industry, right? And we all know that if there is, and there have been, and there will continue to be, some incidents because of poor maintenance, low quality. And I'm not being generic. I'm sure there are ships in there that are being maintained, but the majority of them, age-wise and quality-wise, would not be able to trade in the compliant market. So I think it's a huge problem as an industry, as we are trying to improve on what we do. We are trying to adhere to regulations. We're trying to improve on the environmental footprint, and we're under pressure from many places. The last thing we need is to get drawn into, I think, a big safety incident issue that will draw us back in the public eye. So I think the biggest issue for me is the fact that we focus on the safety part and the incident part, and I think there's a huge responsibility for the politicians on this. And I think, to put it a bit bluntly, like, we're all trying to abide to the rules, right? And that's what we do, and we expect people to tell us what the regulatory framework is globally, because we are global business, right? That's the only thing we can kind of relate to. And if you're not being very stringent on enforcing these things in general, then what are we then left with? We still have a mandate to optimize in our business, but if it's risk-free to break the rules and regulations, and you get away with it in some kind of, ceasefire deal transaction type of thing where you let things go, I think that would be a huge problem for all of us.
You're very right about the sanctioned fleet and the dark fleet not being a single mix. While the overall quality of the ships is clearly poor, you've got some of the Sovcon flot ships, which are financed by Western banks, and some of the first LNG fueled ships trading. You have the MOL ARC ice class LNG carriers, which are probably amongst the most robust ships afloat, frankly. Andrea?
There's actually a very interesting exercise to run on the shadow fleet. So the shadow fleet, depending on who you speak to, can be up to 1,200 vessels. We have gone through it, and we have tried to work out how many of these vessels could actually go back into the mainstream fleet should sanctions be lifted. And actually we were surprised, and we think that up to 25% of the fleet could actually pivot back. And what is interesting, it's actually
what basis is that? Just on the quality?
On age, quality traits that they have performed, and so on and so forth. And that's quite interesting. And I think not many people have been focusing on that, but I've started to hear over the last couple of months that more analysts are spending time on this.
But I've heard that some traders are actually saying that, not traders, oil majors are saying if a ship has Russia as a destination, a port call in the last 3 years, well, we won't trade it again.
I think those things could be relaxed if sanctions were to be lifted, I assume. But that's an interesting new development.
I'll come back to you about your traders' view, but Svein first.
Yeah, I think we need to lift the beams even further in this discussion and step up some political issues here, because the politicians that decided on sanctioning these countries, they wanted to ensure that oil could keep flowing.
Yep.
So they created this market, right? Yep. I think it's greatly irresponsible. And today it's basically impossible to scrap these ships because a breaker cannot pay a sanctioned buyer, because that transaction will put them in a very difficult position. So we need some sort of global effort here to step up to facilitate funding, financing, and making it permissible or allowed to get rid of these ships. We're going to end up having a huge number of ships just being stranded, ownerless, in a very horrible technical condition if we don't do anything. So, of course, it's annoying, and we can talk our own book in, improving our freight market, but I think it's a much bigger picture. And I'm a bit sad that this is not a topic. We all talk about putting ammonia on ships to reduce emissions. This is a much more, imminent, minimum and specific problem. Yeah. So I think we need to encourage politicians to step up and really be brave and get on with this.
Yeah, and I'd like to add something also. I think also there should be more pressure by governments on port authorities to control these vessels. Again, I'm half Brazilian, so I'm thinking about Brazil and these Russian vessels, very badly maintained, calling Brazilian terminals, and the Amazon basin, and risking an oil pollution, which would ruin pristine beaches, natural reserves. I mean, it could be a tragedy. And, governments, like the Brazilian government today, who is very pro-environment on paper, is allowing these trades to happen on these very old vessels and risking an environmental disaster. So I think that's not acceptable, and there should be much more pressure for these vessels to be checked properly.
Andrea, the headaches it's caused for companies like your own in running a book of business must be colossal.
For every company, even for owners, because when you are clearing an SDS now, you have to really make sure that your KYC protocol is solid and that you're not making any mistakes. So it's adding an extra layer, if you want, of complexity to our operations.
Øystein, going back to the LNG business, What do you believe are the long-term prospects? You mentioned this wall of new buildings, but in the States, quite a few of the projects are being delayed. Okay, places like Mozambique are being opened up again, but it's less of a golden period than maybe had been hoped for a couple of years ago. What's your perspective?
No, I think I mentioned it. We do see a repeat of this 2014, 15, 16, 17 cycle. So the markets, there was too many ships last year. That's why you didn't have a winter market. Actually, the rates in the winter was terrible. It was worse than during the summer. So this year has also started off very weak. Next year will probably be bad. 27 depends a bit on the trade pattern. So because Europe has been gobbling up all this US cargo, so for 27 to work out or balance, you need to see scrapping, more scrapping. You finally do see some more scrapping now, especially on the steam side. And then you need the trade pattern. You need to see China stepping back into the market, sourcing US LNG. They are not doing that now. They kind of put a pause on it like they did last time they had the trade war. So it's going to be a tough couple of years. And then 28, things start to look better, because also the high new building prices are deterring people from ordering speculatively, except for Vangelis here. So that's, the order book looks better there. But you need to go through some pain. In the past, the kind of the downturns in LNG has been shorter, because you have had the market growing so quickly. When you have a market growing 5, 6, 7% every year, the scrapping cycle is shorter. So if you have the dry bulk, the kind of the down market there was from 2009 to 2019. So there you have a 10-year market, the down market. For LNG, last time it was 4 years. That would be my guess this time as well.
Jan Ole, can I ask you about your perspective of the future ship financing of the future fleet? You're a member of the Poseidon Principles. You publish your trajectories to the IMO, the net zero targets. However, that's just about the fueling and the emissions from the fleet, not what the ships are carrying. Do you see a time when it would be unacceptable to finance either a second-hand fossil fuel ship or even a new building fossil fuel ship?
There may be a time. I think it's very hard to tell, actually, and it depends on for how long you have a consensus that the fossil fuel is actually going to be part of the energy mix, and at what level. I think it's easier to answer it from the angle that at least we've taken over the past few years, is that we didn't want to abandon any markets, really. We wanted to stay. We thought we would have more impact if we stay with our clients throughout a transition. And I think that's going to be the case also going forward. It's
to work with them as partners rather than
to stay close, impact if we can, and that's what we want to do, of course, but also to help our clients through a transition. And that goes, of course, on the technologies, on the propulsion, but I think also that goes on the cargoes. And we are a Norwegian bank. We are involved in oil and gas. And we have decided to stay in that business because precisely what I just say, we want to take part in the transition.
Could coal be more questionable, do you view? Because there are one or two banks that are now apparently saying that they won't finance second-hand new buildings.
Of course, it could be an issue. We saw banks leaving fossil oil and gas. So I mean, seeing them leaving coal at some point, that could be the case, obviously.
We've talked a lot about the disruption and the chaos around the world. The complexity is rolling in by the trainload as well. And let's go on to talk about the IMO rules and the pricing, and whether the price being set will actually drive change in your view in a few minutes. But before that, the one thing we haven't mentioned today, the word I haven't mentioned, the acronym is AI. If you look in the broader business world, AI is everywhere, everything, at all times, and it's going to rewrite the rule book. I'm sure in professional lives in the office, in personal lives, you're seeing its impact. Trading is data heavy. It's information heavy. Having the right ship and the right time and the right price is vital. Is this another big data moment of a few years ago, which was all a bit of a hot air, frankly? That's the polite way of putting it. Or is this really transitional? Andreas, from your perspective in the heart of Trader, where you're dealing market information that has added insight,
yes.
Do you believe that in the next 2 to 3, 5 years, through AI tools, that will really change what you are doing?
Well, I think so. I think, we're talking about disruption. AI will be disruptive, and the company that learn to embrace AI then will do very well, and the others will do less well, if you want. AI can offer incredible solutions to company. We're using it on a daily basis to optimize our routes. We're using it to filter all the information that we are getting. It's an extra tool that traders can use to continue to perform at their best, I would say.
Because I know some of the shipbroking platforms are introducing some of this stuff, but frankly, those markets have always been so small. There hasn't been the money put in to those platforms to really deliver really powerful tools to disintermediate the brokers from what they're doing. But clearly, there are possibilities.
They said this when the internet came as well.
Yeah.
You could just go to eBay and do the freight.
Do you think it will have a significant impact, or do you think it'll just be
No,
in the
but
background?
this is the same kind of technology as the internet. Yeah. Big data is just part of the AI revolution. Yeah. So because you need this big data set somewhere. But so kind of you have to look at AI as like internet and the telephone and electricity. So this is a utility technology which is going to be everywhere. But I don't think you will use the AI to book your freight, just like the internet didn't kind of bypass the brokers.
Wasn't that partly, though, to do with the intermediaries, principally the brokers, between who were, they had the desire to keep hold of business, to maintain their role in the business?
Yeah, but you still have the same with the stockbrokers. The stockbrokers are still there, even though people can trade on Robinhood or whatever. So,
but the price margin on stock is minuscule compared with.
Yeah, not really. In terms of kind of typically it depends a bit on the segment. So if you are in tankers and bulkers and commodity shipping, you typically the cargoes flow through the brokering system. In LNG, it's a bit more different because you tend to do more direct with the customers. So I don't think the ship brokers have to start going to the employment office right yet.
We'd be out of a job. We wouldn't get any stories anymore. Mikael, the impact of AI on a big owner, a global owner like yourselves.
Yeah. No, I mean, I think that there's no doubt, of course, that there's different ways of describing AI, I think, right? And I think at least for shipping, and I think despite the fact that we like to see that we are super innovative and forth-looking and everything else, we're probably considered more of a operational business. And I think what we have seen, we're part of a company called Complexio, which is also an AI-based platform that is kind of trying to help you solve repetitive tasks. And what you see is that it becomes very tangible when you are trying to roll something out in shipping, i.e., how much am I making concretely for introducing this, or how much can I save on my OPEX, rather than you go on a journey where you do a change management process in your organization amongst the employees. Like, the world is moving, and what you don't want is an organization that gets paralyzed and afraid of what new technology will do, but you would rather help your organization and your colleagues to kind of understand, this is about optimizing, as we've seen through history many times. It doesn't necessarily mean that you are cutting jobs. What it means is you are changing focus from maybe something which is not value-added functions to something that will be. So I do think we should be careful not to underestimate that it is around us. And I think I see it more as a task to make sure that the organization doesn't get concerned. Just like on the decarbonization, you read a headline saying oil is leaving, oil is going out, we don't want oil. Like, the first thought is, I'm going to lose my job, right? Yeah. So those type of things you need to manage. So I think AI is one of them, and I'm very positive that if you can define a problem, then there will be smarter ways to solve it. If you try to go on big language models and just kind of, knock yourself out in different things, it's not going to be efficient.
Last question, quickly for you. The IMO, the increasing trajectory of the IMO carbon pricing has been criticised, but it's been welcomed. It is obviously historic of being a global deal. Could I ask you quickly, is it, as it ramps up, so a conventional VLCC in 10 years' time would be facing, what, $20,000 in fees per day for burning conventional fuel in 10 years' time? Is that trajectory going to drive real change in the business case for investing in alternative fuel ships and then kickstarting the fuel cycle? Carlos, could I come to you for that first?
Yeah, thanks. Yeah, well, I ran some numbers for an MR1 trying to simplify things, which assuming it was trading only in Europe, assuming fuel EU is not there anymore because it's replaced by the midterm measures, but EU ETS stays, and by the early 2030s, yeah, the TC equivalent cost could be around $7,000 per day, $7,500 per day, depending on your assumptions of the UA costs. So I think that is very significant. I think it will drive change. There is, of course, graduality in the implementation of these regulations, which is good. This is my personal opinion. I think the energy transition is very important, but as societies worldwide, we have other priorities too. I mean, we have energy security, we have economic security, healthcare, we have governments in developed countries which have strained budgets. And of course, this energy transition is costly. It will create inflation. Somebody will have to pay the price of these additional levies. And therefore, it is important that it is done gradually, also for the success of the energy transition, because if we do it too aggressively, then there can be a backlash. And to a certain extent, we already have seen a backlash in the US, a very big backlash. And of course, Trump's election was not linked mainly to this issue, but it was linked to inflation. And this energy transition does fuel inflation. So I think that what has been proposed will probably achieve the goals. And yeah, I wouldn't do it more aggressively than what has already been.
Can I just shoot in? You know, we have no clue what the cost is going to be, because IMO is probably going to change the rules again.
I think you're right, but I think also let's not take it out of context. I mean, if it is $20,000 a day, you're basically 50 cents a barrel of oil, and the end user will have to pay for it. I think broadly speaking, either if you're going to fix this problem, either we all have to reduce our living standard, consume less, or we have to be willing to pay.
But is that something that we will have to think about in this one?
Of course, and or you're willing to pay to uphold your living standard, or some technology will really fix it and maybe improve our living standard at lower cost. But this is a longer-term plan. This is not being done in 5 years, right? So
I'm afraid we've got to wrap it up there, because at 1 o'clock precisely, I and all of us will turn into pumpkins in this room, because it's being corralled for another event this afternoon. So I'm so sorry to wrap it up. But could I say many thanks to the panel? We've covered a lot of ground. Thank you. Thanks. Thank you. Stay there for a moment. Many thanks. Just a few, if the panel could just stay there very briefly, just a few closing comments. First of all, thanks to all of you, and thanks to all the panelists through today for making it interesting. I hope you're not sick to death of my voice, but next time I'll be yanked off probably. I'd like to thank the sponsors again, of course, for helping support this event to make it possible. And now, if you want to stay for some refreshments and a bit of lunch, it's not directly outside here. It's down on the mezzanine. So you go out and down the first set of stairs, throw a quick left, and it opens up there. Thanks again, and look forward to seeing you at forthcoming TradeWinds events, mostly in Asia, sometime soon. One in Greece in September, which should be fun. But thank you all again, and thanks to the panel. Cheers, everybody.